Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. I can say Happy New Year once again to those of you who are joining in. I mean, we've been live, of course, yesterday as well. But I don't think there's a statute of limitation to say Happy New Year, Mangalam? Till about the 5th, 6th?
Till about the 5th, till about the first weekend. That's what you do. And, or, you know, how frequently you speak to people. But so long as our graphics team pulls Hello 2026 at the bottom of the screen, we are mandated to say Happy New Year to all our viewers. But, you know, be that as it may, Happy New Year. It doesn't, in the news flow doesn't look like it's the start of a new year, right? Yesterday, you expected it to be a low, calm start to the day. You had this big bazooka come in the form of increased taxes. And then you thought that, okay, it's a Friday, the first Friday, the start of a new year, nothing will happen. Then here's the big, a long impending Devyani and Sapphire merger that's come by. So there's a lot of news that will continue to, keep us busy at the start of the new year.
And look specifically targeted towards you, Mangalam.
Oh, what can I say now? Well.
All right. Okay, well, let's quickly take it from the top then, in terms of what you need to know as we begin a fresh new trading session. US markets were shut. I mean, it's not very much because global markets were all shut, except, of course, India, which is the only large market which was trading yesterday. So no US from last night. Little by way of news flow, one way or the other. There's some bit, like for example, Trump delaying tariffs on, those tariffs on furniture, imports, etc. I think stuff like Italian pasta and more. But I'm not mentioning. I mean, I've mentioned all that, but not in detail. But apart from that, not very much. Asia global markets will begin trading today after, of course, the holiday yesterday. And I think some of them are trading. Kospi, by the way, starts an hour later than usual. So still easing in many of the Asian markets and, of course, shuts on time. It's just basically us and local cues. And as Mangalam said, there's enough and more, which is really part of the mix right now. So you've got the big changes to cigarette taxation and that big slam dunk on ITC, Godfrey Phillips, etc. And, of course, I think what's also happening is that because a lot of analysts, etc., are on this leave period and they slowly start to trickle back into offices, you will start to see a lot of the street move their estimates up and down based on news flow. Always happens. But what doesn't happen is this amount of news flow in the first couple of days of a new year. So we've got a couple of downgrades which we will outline a little later as far as ITC is concerned. The other bit, of course, is insurance commissions. That's the big story that we've been following over the last almost, fortnight, more than a fortnight now. Again, because of the phenomenon that I mentioned earlier, you will start to see, earnings expectations being moved up and down, and the street basically starting to take note of what has happened in this dead zone of the year, which is, of course, the Department of Financial Services Secretary Commons, IRDAI annual report, and the data that we highlighted out of that. And of course, yesterday, the RBI Financial Stability Report, all in a week, unprecedented, kind of putting the spotlight on commissions, insurance commissions, which are going to be in focus. So I think, in terms of local news flow, there is enough and more. There's the auto sales, etc., which we will discuss as we go along. There's a bit about cement. So enough and more to keep us occupied and entertained in that sense. Now, I'll just tie in and close out with the levels here. We are still basically around treading water around the 20-day moving average for both the Nifty and the Nifty Bank. So 25,995 is the 20-day on the Nifty. We're above it. For the Nifty Bank, that level is 59,234. And we are above that as well. So both the 20 and the 40-day have acted as decent supports. The 20-day broke, but the 40-day gave support. And, we got a bit of a lift the day before with that big move. And for both these indices now, we are trading above the short-term 20-day moving average. So that's the broader setup. I think it's more stock-specific rather than taking a bigger call as far as the index is concerned. But Mangalam, how's the positioning on the F&O side looking?
I take that point entirely. It's more stock specific than the index call itself. We had the Nifty, which was marginally in the green yesterday, virtually unchanged. But day one of 2026, while the news flow wouldn't suggest so, the market move definitely suggests so. Because the Nifty high was 26,197, the low was 26,113. That implies just an 84-point range on day one of trade. But the broader markets, they were abuzz. Even though the small cap index was in the red, the Nifty Next 50 was up 0.4%, and we had the mid cap index, which was up around 0.5% as well. The Nifty was dragged lower by ITC. We spoke through the day yesterday, and perhaps will be the stock of the day today as well. It dragged the Nifty single-handedly by about 95 points, the biggest intraday fall that we saw since March 2020. And the stock saw 6,000 crore worth deliveries selling, with downgrades coming in now. So could there be more or not is something that we will be tracking. FIs, they are on the leave because, while the domestic institutional investors bought about 1,500 crores on a net basis, the sale was 3,300 crores by the FIIs. The gross volumes were 60% lower than December average, and December by itself is lower than the annual average. So yes, there were limited flows, and the markets moved on limited flow. So that exactly brings us to the setup. The clear trend will emerge only from the next week as trade volumes return. And until that happens, be that as it may, we're still holding above the 20-day moving average. Prashant alluded to that for both the Nifty as well as the Nifty Bank. And the FIs are still 91% net short. So if we sustain above these levels and hold, despite the news that comes by and with the flows coming by, then maybe there is case for that short position to unwind itself, or short covering that may come before the budget. Until that happens, the 26,200 call writers very active, 26,150 put writers very active. So put writers are moving their range higher, the support higher, and the call writers are steady at 26,200 to 26,250. So what does this mean? Option writers are positioned for this 26,050 to 26,250 sort of range, 200-point range on the index. Stocks that I'm watching out for: sale on day 2 of the new series enters F&O ban. So that's one stock, because steel stocks have been on our radar. And we'll talk about Devyani and Sapphire in detail in just a bit. But could that have an impact on all the QSR stocks today? Jubilant Foodworks, we have Westlife, Restaurant Brands, which is also, there is a deal which is likely out here. So the entire QSR space will be in focus today.
Absolutely. It's an important space to focus on, and stocks, of course, are off quite a bit from their highs. Well, it's still the early into 26, and as more and more analysts come back into offices, they will publish outlook reports for 2026, right? So we compiled a few, and we will continue to do this through the course of the next couple of days. Hormuz is standing by with exactly that. Hormuz, take it away, and are most of them a safe 8-10% kind of upside forecast for the year, or is there more?
Well, the general trend that has emerged from what we have today is the fact that most of these that have come out with Outlook 2026 are constructive on Indian markets, and there are multiple triggers that they highlight for that as well. Let's start off with Ridham Desai of Morgan Stanley, who said that this quarter is likely to be an action-packed one, with earnings expected to beat expectations, the RBI maintaining its foot on deregulation and further reforms from the government, and of course the possibility of a trade deal with the United States. Now, sectorally, they are overweight on lenders and discretionary consumption, and these will benefit from India's outperformance. Now, on the flip side, Mahesh Nandurkar of Jefferies believes that EPS growth will continue to be the strongest determinant for the stock performance in this calendar year. Now, their model portfolio of 30 stocks is offering an EPS growth of 21% for FY27 compared to 16 for MSCI India. Now, he wrote further that paying up a little for visible growth makes sense, and hence the model portfolio has a slightly higher price to earnings ratio of 23 times, but has a lower price to earnings growth or PEG ratio of 1.1 times compared to 1.4 for the MSCI India index. Now, their top picks for this year include the likes of Axis Bank, Bharti Airtel, which did well in 2025 as well, Cholamandalam, TVS Motors, Mahindra & Mahindra, Ambuja Cements, Lodha, Godrej Properties. Of course, they have been very bullish on real estate, Max Healthcare, JSW Energy and GMR Airports, of course. But also let's now take you through Citi's outlook for 2026. And Surendra Goyal has said that earnings growth trajectory is likely improving, aided by financials. But further, the decent risk reward should support the Nifty and MSCI India's returns and supported by relative valuation potential. Now, the US trade deal, global equity broadening beyond AI enablers, etc., will also be some supportive factors. Now, in 2025, FII outflows had reached $18 billion, while DII inflows were at $90 billion, and primarily fundraisers stood at over almost $30 billion. Now, among sectors, telecom, commodities and banks outperformed, while IT underperformed significantly. Citi's December 2026 target for the Nifty is around 28,500.
All right, 28,500 for 2026. Thanks a lot for that, Hormaz. Initial outlooks for 2026 coming in, and as Prashant said, more over the next few days as brokerages and analysts come back to work full flow. But we're back, and let us tell you what the interactions on the show today are. At 8:35, an important discussion around the new tobacco taxation starting from February 1. At 8:45, we will be joined by the management of Coforge. But at 8:35, there will be Abneesh joining in. Sudhir Singh and Shweta Jalan. Sudhir Singh, the CEO of Coforge, and Shweta Jalan of Advent International joins in to discuss the company's Encora deal. And then thereafter at 9:20, Shreyas Devalkar of Axis Mutual Fund, he'll be our market master for the day. Come 9:35, the management of Muthoot Finance joins in to discuss the company's outlook for the second half of this year, whether their Goldilocks scenario continues or not. Following that, the management of Zydus Wellness, the stock up 10% over the last two trading sessions. A lot of people making resolutions to eat healthy. Will Zydus Wellness's portfolio, the mega trends around health and nutrition, benefit from that or not? And towards the end of the show, we have the management of GE Shipping joining us to discuss their second half outlook and more.
Okay, well, let's focus on the big deal, right? And this has been long awaited, and it's a confirmation of a CNBC-TV18 news break. The board of Sapphire has agreed to merge with Devyani International. Rashna broke that story many weeks back, and she's with us now that the news is official. Rashna, take it away.
Well, this is a CNBC-TV18 Newsbreak confirmed. Sapphire Foods has approved its merger into Devyani International, confirming what we had reported earlier. On December 4th, we had said that the merger talks were at an advanced stage, with the swap ratio being the key hurdle. At that time, sources had indicated that the ratio could be close to 1:2. The ratio now that has been finalized under the approved deal, Sapphire Foods shareholders will receive 177 shares of Devyani International for every 100 Sapphire shares, or a 1:1.77 swap ratio, that is. The merger is planned to take effect from April 1st, 2026, subject to approvals from regulators, shareholders and the courts, of course. Once completed, Sapphire Foods will cease to exist as a separate entity. The aim of this merger is to bring KFC, Pizza Hut and other brands that both the companies operate under one listed company in India, while excluding outlets at airports and railway stations. As a part of the deal structure, Sapphire Foods Mauritius, a promoter entity, will sell around 5.95 crore shares, or that's about 18.5% stake, to Arctic International, which is a Devyani Group company. Arctic can later sell the stake to a financial investor. The board has also approved a new agreement with Yum India, updating business and commercial terms for KFC, Pizza Hut and other operations, other brand operations after this merger. Also after this merger, Sapphire's promoters will be treated as public shareholders in Devyani International. Now, the deal marks one of the biggest consolidations of India's fast food sector, with scale and cost savings seen as the key benefits.
All right, Rachna, thanks a lot for that. So that's about Sapphire and Devyani. Congratulations on the news break. We will take a short break, but a lot of stock-specific action to track today. We'll get to it in just a bit in our top 10 segment. And, you know, as Rachna gave us an inkling, we are looking at Sapphire Foods, Devyani International, TVS Motor Company, Hero MotoCorp, Indian Bank, Aurobindo Pharma, MOIL and Punjab and Sind Bank. All of them on our radar on the back of positive news flows, updates, monthly sales data. Hyundai Motor is the only stock which is likely to open in the red, while South Indian Bank, they're a mixed opening out there. Welcome back. You're watching us here on Bazaar Morning Call. We come to you on day 2 of the new year, last day of the week. So we're just waiting for the weekend. The news flow is not. So let's tell you about the top stocks that we're watching. Our entire team is here standing by. Morning, guys. It's a Friday. Happy Friday. I'll start. We'll look at Devyani and Sapphire. You know, the board of Sapphire has decided to amalgamate with Devyani International. It's a long-expected merger of Yum brand franchisees, which is finally announced. The swap ratio at 177 shares of Devyani, which had a CMP of 147 rupees, and 100 shares of Sapphire Foods with the current market price 261 rupees. It's valued at par with current market price. So basically, the street was anticipating a bit of a premium for Sapphire. That hasn't happened. That's positive Devyani. Additionally, Devyani will also acquire 19 KFC outlets in Hyderabad, operated currently by Yum. So they have complete control of all the Yum brands in India and a few neighboring countries. Why is this positive for Devyani? Revenue and cost synergies and removal of overlaps, benefits of scale and operating leverage, and accretive valuation. Why do I say accretive valuation? Just look at the pro forma financials. Devyani currently does 4,900 crores of sales, and they have 2,000 stores, margins of almost 10%. If you look at the total business post the merger, Devyani will have 3,000 stores, close to 7,800 crores of sales, roughly 756 crores of EBITDA. So all in all, the revenue grows up by 58%, EBITDA grows by 53%, and this is just pro forma, not accounting for synergies, and the equity base goes by just 46%. So it is a value accretive, very positive deal. Expect Devyani to be in bright green. Sapphire, not so much, but eventually Sapphire will catch up to Devyani because now the merger ratio is locked.
Absolutely. There was some expectation that the merger ratio will be more favorable for Sapphire.
Yeah.
But that's important to note the change, as Mangalam highlighted. Well, auto sales numbers for the month of December now in focus. And Sud has, of course, been keeping track. Sud, morning.
Morning, Prashant. So TVS Motor, Hero MotoCorp and Hyundai were the ones to report the numbers post-market. So I'll start with TVS Motor. It was a big beat against our expectations. Total sales have increased by 50% against our expectation of around 26%. And good party, except three-wheeler, all the segments have reported numbers that were much better than expectations. And the scooter was the best performing segment, which has seen a growth of almost 48%. Now coming to Hero Moto, I'm going with minor gain, and there is a reason to it. If you take a look at the wholesale numbers that company has reported, numbers have come in better than expectations. Total growth was 41% versus our estimate of 29%. Motorcycle, which forms almost 88% of total sales, has seen a growth of 35%. Scooter sales have almost doubled, but there is a big divergence between wholesales and retail sales. Wholesales that company has reported has seen a growth, domestic has seen a growth of 43%. But if you take a look at the Vahan data, domestic retail sales in the month of December has seen a decline of almost 12%. Hyundai, amongst all the peers, it has seen the least growth in the month of December. Total growth was 6.6% versus our expectation of 13%. And the drag has come in from domestic business, which has seen a growth of just 0.5%, while exports continue to do well, which has seen a growth of almost 26.5%. So, big gain for TVS Motor, minor gain for Hero Moto, and red for Hyundai.
All right. That's a sum up of all the auto numbers that came post-market for the month of December. Let's go across to Gaurav now. Indian Bank. Gaurav, the update?
Well, yes, if you look at Indian Bank in the last quarter as well, we have seen Indian Bank actually outpacing their own guidance, and in this quarter as well, they have actually outpaced their own guidance in terms of advances growth and deposits growth as well. So advances growth that came at around 14.5%. Remember, they had guided for 10 to 12% range, and for deposits, this number came at around 12.5%. Again, if you look at the guidance, company had guided for 8 to 10% growth. So definitely the numbers, at least in the provisional updates, seem to be higher than guidance. Now, what remains a key thing to watch out for is net interest margins, because remember, there was another rate cut in December. So let's see how management's commentary is going to be. But all in all, in terms of numbers and at least in terms of provisional updates, it seems that the company is well on its growth trajectory, with CASA also in focus, because if you look at current account growth, that has also has been higher than the overall deposit growth. So definitely watching out on this stock. But for now, today, we are going with green today with this one.
Okay, all right. Thanks very much for that, Gaurav. Let's talk about pharma now. And Aurobindo has made an acquisition. Ekta is here with details. Ekta, morning.
Morning. Yes, well, Aurobindo has made an acquisition to strengthen its domestic business. So they will be acquiring the branded non-oncology prescription formulation business of Khandelwal Labs for around 325 crores. So this business is going to contain 23 brands and 67 SKUs, 9 pipeline products. Anti-infective and pain management are the major portfolios. As of FY25, the revenue was around 113.5 crores with an EBITDA of around 28.9 crores and margins of 25.5%. The company said the acquisition is going to add further brands in the pain management and anti-infective space and will complement their existing product portfolios and expand their domestic business. The domestic business for the company just about started in 2022 with a small acquisition at that point in time as well. So this would possibly help them expand or maybe just grow their footing in the domestic business.
All right, so that's about Aurobindo Pharma. Well, Gaurav, back to you. A lot of other stocks in news.
Well, let's talk about Punjab and Sindh Bank. This company came up with their quarterly updates. If you look at the numbers were actually in line with the guidance because the loan book growth that came at around 15.2%. But if you look at the guidance, they had already guided for a higher growth of around 15 to 16%. So definitely they are meeting with their own guidance. Apart from that, in terms of deposit, that actually looks a bit low at around 9.3%, but it is again in the guided range of 8 to 10% that management had said. South Indian Bank, on the other hand, actually reported 11.3% growth. It is a bit lower than its own guidance of 12% on a year-on-year basis in terms of advances, but if you look at sequential number, that remains strong at around 5%. Other than that, deposit growth, that came in healthy at around 12% on a year-on-year basis, higher than its own guidance. Lastly, let's also talk about MOIL, because this company has now announced a revision in the manganese ore prices, almost by 3 to 10%. If you look at all the ferro grade manganese ore, they have increased their prices by 3%, and on the other hand, prices for SMGR of a specific category of MN 30%, they have increased their prices there by 5%, but on the other hand, prices for SMGR with 25% and 20% MN, they have decreased their prices in the range of 5 to 10%. So let's see how these stocks also perform in a day-to-day.
All right, thanks a lot for that, Gaurav. In case you missed it, here's a quick recap of all our top 10 stocks. Stocks with positive news flow: Sapphire Foods, Devyani International on account of the merger, TVS Motor Company, Hero MotoCorp, and Indian Bank on strong updates coming in. Aurobindo Pharma, the acquisition that they've made, MOIL and Punjab and Sindh Bank as well on the updates. Hyundai Motor, the sales growth was slower than the peers, and that's why the stock likely to open in the red. South Indian Bank may open mixed. With that, let's go across to Manisha Gupta for a roundup of action from the commodity market overnight. Manisha, day one, was there enough volumes and are there enough trends?
Well, the volumes are just about seeping in, but the trends seem quite clear right now, Mangalam. After a very, very strong 2025 for many of these commodities, we've started 2026 not on a selling base, but on a buying pattern yet again. So when you look at the silver prices, we gained 2% overnight. That's how we've started 2026 after the best yearly gain since 1979 and putting in 155% of gains in the previous year. Silver seems to be holding on to its gains. Well, U.S. has put silver in critical mineral list. There are low inventories that we are dealing with. The industrial and the investment demand seems strong, so that is keeping silver in good humor. And that's exactly what we are looking at in case of gold as well. 65% of gains in the previous year. We've started this year almost a percentage point on the higher side. So $43.50 an ounce seems to be holding right now. What has also started the year in positive is the crude oil prices. After seeing the biggest annual decline in 5 years for 2025, this year has started 0.5% on the higher side. Well, it also has been about the OPEC Plus virtual meeting that is on 4th of Jan. That seems to be in focus. And ahead of that, there is a bit of a buying that has come back in case of crude oil prices.
All right, Manisha, thanks very much for that. Appreciate it. That's commodities and oil very much in focus. We take a quick commercial break here. We come back to the big story from yesterday, which of course is cigarette taxation seeing a big bump up. We have Amnish Agarwal of PL Capital and Abnish Roy who will be with us to take us through what happens now to ITC and what you should be doing. Stay tuned, coming up. Welcome back. Well, there's what just sort of coming into this Friday morning. very little by way of cues. Asia is trickling back and trading after, of course, most global markets being shut in trade yesterday. But no dearth of action here in India, and it's mostly all local in terms of news. So let's talk about the big movers and shakers from yesterday, stuff which had price action but also backed by volumes and, of course, later delivery action. Hormuz is standing by with that list. Hormuz, over to you.
Morning, Prashant. And as you were mentioning ITC earlier in the show as well, a delivery-based selling worth close to 6,000 crore rupees that was seen in yesterday's trading session. And the volumes are equally determinant of that. Now, even yesterday's trading session, you saw the stock fall 10%, is the biggest single-day fall since 2020. The highest volumes in almost the last 8 months for ITC. Over 28 crore shares were traded yesterday on the stock. The 20-day average is just around 80 lakh shares. And out of those 28 crore shares, over 15.5 crore shares were marked for delivery, so significant volumes there as well. And the 20-day average on the delivery front is less than 55 lakh shares, so very high on that aspect as well. The stock ended at the lowest level since April of 2023, so that was the kind of fall that you saw on ITC in yesterday's trading session. On the flip side, Anterio Health was one such name that did well in the broader markets yesterday. A double-digit move, 10% gain, biggest single-day gain since April, the third straight day of gains for the stock. And in the last 3 sessions, the stock has gone up almost 20%, and it is backed by strong volumes as well. Over close to 8 lakh shares were traded yesterday. The 20-day average is just 60,000 shares, and out of those 8 lakh, close to 2 lakh shares were marked for delivery as well. Here, the average 20-day is around 41,500 shares. But despite this move in the last 3 days, the stock still remains below its IPO price, which is close to 1,260 rupees. And lastly, Sunteck Realty, another underperforming name from last year that did well yesterday, snapped a 4-day losing streak. It was the biggest single-day gain and volumes that the stock had seen in the last 4 months. And Thursday's volumes were the sum total of the last 32 sessions put together for Sunteck Realty. And close to 45 lakh shares were traded on the stock yesterday, 20-day average of just 1.5 lakh. But out of those 44 lakh shares, only 6 lakh shares were marked for delivery compared to a 20-day average of just around 87,000 shares. And the stock from its 52-week high, which is close to 550 rupees, is down around 20% from those levels. And over the last 12 months as well, the stock is in the red, down around 15%.
All right, take that point, Hormaz. Thanks a lot for that. Those bunch of stocks, Anterio Health and Sunteck Realty, came up for, on the screen even when we were looking at closing bell, because most of the gains actually were back-ended in the second half of trade. If you pull up Anterio Health as well, a big up move that happened in the second half. And the recent fund action on Anterio Health was that of ICICI Pru. And incidentally, we also spoke with S. Naren of ICICI Pru AMC to get his outlook for the market in 2026. Let's hear out what he had to say.
Yeah, actually, this is a mature bull market. This is not a initial part of the bull market. You've seen all sectors do well. You've seen all the stocks do well. And US has also got a mature bull market. Therefore, we are in that stage, where we have to do stock picking. There's nothing at this point of time which looks dirt cheap at this point of time that you can make big money at this point of time. We are no longer saying that small cap is a no-no or something like that. We have to look at all capitalizations, micro cap, mid cap, small cap, everything, and look for ideas where stocks have corrected meaningfully. And you feel that we can make money. We have to do work on those companies also. It's not that you can buy anything and everything just because it has fallen. We have to do the work also. And that's what my colleagues are engaged in across sectors. Say many of these quality oriented sectors are getting more interesting at this point of time, but none of them, if you look at whether it is FMCG, whether it is some of the pharma sector stocks, some of the IT stocks, these are all some of the stocks, which are actually in favor in 2020. Today in 2026, those are the stocks which are looking better at this point of time. If we had wanted to say a specific theme, it would be easiest for us to say invest in this theme. But frankly, there is no such theme at this point of time, because the reality is, can you show me a sector which is trading at less than 20 PE and has done badly at this point of time? Then you'll find that there is no such theme at this point of time.
Lots of wisdom coming in from S. Narain. We take a short break, come back. On the other side, we speak about the tobacco debacle that happened in stock markets yesterday. Amnish Agarwal of PL Capital and Abneesh Roy will be joining us. Welcome back. Let's pull up the GIFT Nifty. It's indicating a mild positive start to kick things off on this Friday morning. But the index is not, the story of the day. The story is in individual stocks. And we have Siddharth Khemka of Motilal Oswal Financial Services who joins us now. Siddharth, two sectors that will be in focus today. One will be, the tobacco plays, ITC and Godfrey. And the other will be the quick service restaurants, which is basically on account of the merger that is announced between Sapphire and Devyani. One was expected, one wasn't. Which way do you think these stocks go from here?
Yeah, good morning, Mangalam. So, first of all, ITC, I would say we have downgraded the stock to neutral today. We believe that this is an unprecedented tax hike. And for last few years, last 4 or 5 years, we had seen a stable tax regime. And now the sharp hike in the excise duty, I think that is likely to impact the business way ahead. So effectively, I think we have discussed a lot of numbers. You guys have discussed a lot of the tax numbers yesterday. So essentially, the company needs to take almost a 25-30% price hike to maintain the realization. And with that kind of price hikes, we believe that volume impact can happen. There could be, we need to see whether the company is taking a gradual pass on of price hikes or takes it in one go. The major factor is that in the last 4 or 5 years, we have seen that the illicit cigarette market has lost share because of the stable tax regime. But with now such sharp hike in the taxes, I think that again needs to be a big factor. So what we are factoring in is that the next year volumes could see a decline after several years, and that could be a big impact on the EBIT numbers. So hence we believe that with this kind of negative growth or degrowth in the core business and profitability, we don't see any upside potential in terms of valuation. And we believe there could be more downside, or the stock could languish at current levels for some more time. So hence we have downgraded the stock to neutral and avoid such in such an environment.
Service space?
Sorry, I did not get you.
The quick service restaurants, Devyani and Sapphire.
Yes. So I think with regards to Devyani, this news has been in the talks for last several months. Finally, the consolidation of Yum brands in the Indian operation, we believe this is a big positive for Devyani, because we have seen that other players, for example, you have the Jubilant Foodworks, which is the main primary franchisee owner for India and has done well the last several years. So with the consolidation, we believe the management has indicated in the past presentations that there could be synergy benefits of about 250 to 300 crores, and as and when they occur, they could lead to a jump in profitability of about 10 to 15%. Plus, I think market will give a higher valuation multiple to a consolidated franchisee where a concentrated effort for the growth of the business is. At the current the merger ratios, that do not give any, so the merger is at the current prices, so there is no arbitrage or any upside to that. So we believe that a consolidated business will be very positive for Devyani in terms of the market leadership, the growth outlook, as well as the operational consolidation that should lead to improvement in profitability.
All right, short but effective chat there, Sid. Thank you so much for joining in. Wish you a very happy new year, your team, your family, and we continue to interact and get these valuable nuggets from you through 2026. But you spoke about ITC, and the fact that you've downgraded it to neutral. You're not the only one. In fact, if you look at a lot of the brokerages this morning, nearly all of them have downgraded the stock to neutral and taken a sharp target price cut as well. Start with Nomura, downgraded to reduce target price of 340 rupees. They believe that the cigarette tax hike of 40% would imply a price hike of over 35%, which means that the volume decline could be over 15% in FY27. Cigarette net sales will decline 14% and EBIT will decline 17% in FY27 as well. Not just that, illicit cigarette can increase and impact future growth. And they've cut the target multiple for the cigarette business from 25 to 16, and that brings them to the target price of 340. Nomura too has cut the multiple on tobacco business from about 23 times to 17 times. They expect an EBITDA downgrade of around 7% each over the next few years. They've downgraded the stock to hold from buy. The reason why they're hold and not sell is because they believe that there are positive triggers in the form of 4% dividend yield. They have a diversified business, likely favorable turn in tobacco raw material prices. So those are factors that still keep them under hold and not just a sell. JP Morgan, they've downgraded the stock to neutral, target cut from 475 all the way down to 375. And they are saying that maybe over 25% hike if the NCCD is removed and more than 35% hike if it is not removed. Basically, similar to what we've been calculating here on CNBC-TV18, saying that there could be increased risk of consumer downtrading and also increase in offtake of illicit cigarettes. So this is basically a clear negative for the sector. But how much negative, what is in the price, and what happens from here on? Abneesh Roy, the Executive Director at Nuvama Institutional Equities, joins in. Abneesh, back early from a holiday because, all the consumer analysts were jolted by this news and alongside that, the Devyani and Sapphire merger. Let's start with ITC first. The news obviously bad, but how much of it is, perhaps now in the price after a 10% cut? How much more downside do you see from here on? And what kind of volume impact do you expect because of this price hike?
Sure, thanks. Good morning and Happy New Year to everyone. It's not a Happy New Year at all for cigarette companies. But this is happening after 7 years of, I think, favorable, benign tax policy by the government. We are seeing after Maharashtra spirits hike, which was very severe. Now we are seeing the second example of a sin sector getting very high taxation. We were expecting double-digit tax hike in cigarette, but the quantum of hike, as you rightly said, is no one would have thought that this kind of a hike will happen. So yes, my sense is the stock can languish here and street will then wait for the price hikes. Our sense is price hikes will happen gradually. For such a sharp price hike, I think every consumer company would like to do it over the next 2 quarters, cigarette company over the next 2 quarters rather than on day one. Second is, yes, down trading can happen. On the flip side, the tobacco costs are favorable in FY27. And ITC, FMCG is more of a foods company. So noodles, biscuits, and snacks. There is a GST rate cut which will benefit. Paper merger with Birla is happening, Century is happening. So those 3-4 businesses will drive the overall profitability for the company. Our sense is clearly the cigarette business in FY27, based on the current numbers, there will be a volume dip, there will be a EBITDA dip, but the stocks will languish. Yesterday's 10% correction, I think largely it is factoring in this kind of a very sharp up.
All right. Abneesh, we'll come back to you for more. Meanwhile, we also have Amnish Agarwal, who's the Director, Institutional Research at PL Capital. Amnish, obviously, initial reading is between 25 to 35, almost up to 40% price increase as well. That's unprecedented. Have you all ever done a sensitivity analysis on what kind of impact it could have on volumes, earnings, and how much of it is in the price? Because, what the consensus now is, even if the stock does not fall more from here, it's unlikely to rally back. Would you agree with that view?
Okay, hi Mangalam. So 2 things here. First of all, I think this is very unprecedented kind of a situation. So never ever we had seen more than say 15-20% kind of a price increase in any single year. And we have instances of say 2015, 2016. I will not say 2021 because of COVID, but that year also there was a massive increase in taxes which had happened. So in the past also we have seen 8%, 9% kind of a volume decline, and given the fact that this price increase will be maximum we have seen in the history in the last 20-25 years at least. So I think the volume dip could be much more than what we are anticipating. I think it can go into the at least double digits. Okay, is my sense at this point of time. Now, in terms of profitability, I think whatever you can say, even if they improve margins, I think the profitability in cigarettes might take a little bit of it. There will be some, you can say, benefit which will come to them in paper as well as in FMCG. But overall, I think we have got our estimates by around say 10 to 11%, and it would be very difficult for a company to show any meaningful profit growth. It's like -2 +1 +2 kind of a situation. Now, coming to the stock price, I think it is not only to do with earnings. ITC was always a very cheap stock. The valuations were very attractive. And however, the problem here is the change in the policy stance of the government. Because we have seen that whenever the policy stance is against the industry, it is not only the earnings which take the hit, it is the P multiples which take the hit. So, for example, you look in the past, the stock even went down to sub 200 levels because every year we used to see the price increase, which is happening due to taxation. And now if you look at the rates which the government had given when they passed the, you can say, the Excise Act, and the rates which have now been imposed, still there is a gap of 25 to 40%. It means that maybe next year, maybe 2 years down the line, that your excise rates can actually go up. So that actually makes the problem slightly structural, because we had seen relatively, you can say, stable taxation from the last 5 years, due to which there was, you can say, a lot of share which the industry had gained from illicit cigarettes, lot of, you can say, stability which had come into the performance, and which had actually resulted in the, you can say, the stock also going up from sub 200 to 500 rupees at one point of time. Now with this kind of I think policy stance, I think despite big hit to the stock coming yesterday, I don't rule out the stock gradually, I would say, losing favor with many of the institutions, and I see a slow drift happening in the stock over the medium term.
All right. So that's the focus on ITC. Coming back to you, Abneesh. Abneesh, ITC wasn't the only news yesterday. Day one of the year. By the end of the day, we also got the long impending merger announcement for Sapphire and Devyani. Prima facie, it looks positive, Devyani, because one, the deal is done at par, and secondly, the synergy benefits to Devyani would accrue a lot more, and there is a valuation gap as well. So they've gotten more revenue, more EBITDA for a lesser shareholder dilution. What's your view if you cover these two stocks and on the QSR space in general?
Yes, it's a positive development. This was being expected for a long time, and good to see that happening. And clearly there will be cost synergy benefits. There will be the headquarters saving, etc. So yes, it's positive for Devyani, and we are definitely expecting some kind of a recovery in terms of the QSR and Pizza Hut, and definitely we do see that the stock should recover. Because there has been almost 50,000 crore kind of a GST consumption boost. So we see that the discretionary categories will see benefit. So yes, it's positive for Devyani. Yes.
All right. Take that point. Abneesh, top picks before we get into earnings season?
Sure. In terms of Q3, again, our topics will remain largely the same. So we like Nestle, we like Britannia, Godrej Consumer, Marico. We also like Asian Paints. These will be the top picks. Tata Consumer continues to be something on terms of our recommendation. The stock has done quite well. So near term, yes, the valuation is almost priced to the perfection. But from a 1 year, Tata Consumer continues to look good. So these will be the top picks from the FMCG perspective.
Okay, all right. Gentlemen, thanks very much, both of you, for joining us. And it's a pleasure getting that perspective. I mean, it's not pleasurable news with regards to especially tobacco taxation. But on the QSR front, I mean, it's a deal which has been long awaited. We reported on it, and now, of course, it's confirmed. Let's actually talk about the big transaction, big M&A deal, which closed out 2025. Coforge's acquisition of Encora, which is a Silicon Valley-based AI-native software engineering firm. It's a massive deal valued at about $2.35 billion US. This marks the largest overseas acquisition by an Indian mid-tier IT company. The role of private equity players, Advent and Warburg, who were the primary sellers of Encora, is also interesting. Unlike a typical cash-out exit, the PE owners have agreed to all-stock deal. Basically, they're rolling over their entire investment into Coforge. They will collectively, post the completion of the transaction, hold approximately 20 to 21 or so % of Coforge's expanded share capital. So with that short preamble, let me bring in, Coforge's man, Sudhir Singh. Needs no introduction. He's been a leader at Coforge and created significant value over the last few years. for shareholders. Shweta Jalan is Managing Partner at Advent International. Thank you both for joining us. Shweta, good to see you in the studios as well.
Thank you for having us.
Sudhir, wish you would have been here, but I know you're all over, you're traveling, closing out deals like this one. But this is a really large one, Sudhir, the largest yet for you, and as I said, perhaps in the industry in that space as well. Let me also, before I forget, wish both of you a very happy 2026. It's still early in the year, so you got a lot of work on your hands to integrate this transaction, etc. Sudhir, let me start with you, right? You've done other acquisitions in the past, and I mean, most of those acquisitions have been hailed as successful acquisitions where you've managed to achieve operational efficiency, increase margins, etc., etc. Let's just start with the price, though, for this one, which many are pointing out. Many are saying that the transaction is pricey, Sudhir. 3.9 odd times EV by sales for an asset which is where organic growth, is about 7 to 8% over the last couple of years. The growth in this entity was between 15 to 16% in earlier years, but it's slowed down recently. How do you explain this?
Well, we looked at the value. We looked at where the industry is heading, and we looked at where we want to be. Over the last 8.5 years, Coforge has delivered, has grown 5 times over where it was 8 years back. Our market cap has gone up almost 20 times over where it was 8 years back. When we look at where the next phase of growth is coming from, we need to look at where the industry is going to be. And this asset, from a value perspective, fits right in. We believe there's a new era of enterprise tech that is coming. We believe that the next generation of enterprises, business enterprises, they will have their business capabilities defined by a combination of human and agents, underpinned by a data core and cloud foundations that are purpose-built for AI. If you're not there, we will not be able to replicate performance on the lines of what we've delivered over the last 8 years. And as I said, we've grown 5 times. Our market cap has gone up almost 20 odd times. This is an asset that we very firmly believe offers the value, offers the synergy that will allow Coforge not just to keep growing over the next 1, 2, or 3 years as robustly as we have, but significantly beyond that time window as well. That's how we see it, Prashant. That's how I present it to you.
Yeah, no, absolutely. You must have looked around, right, Sudhir? Anything with AI native is expensive, especially in the US. I mean, nothing. Are we generally in a pricier environment? I mean, you would have been happy to pay less. I'm not sure Shweta would have been happy to take less.
Exactly.
I would have been happier to pay less, but in this case, we don't believe we overpaid by even a cent.
I see.
From our vantage, we've looked at just about anything that's been out there in the market over the last 2 or 3 years. When it comes to capability, when it comes to looking at an asset that was born in the Silicon Valley, which is where Encora was born, when we look at the capabilities, not just of Encora, but of the merged organizations, when we reflect on the fact that the two organizations will have a $2 billion data, cloud, and AI core.
Got it.
We think we're creating an asset that's, as I said earlier, it's not just a 2 or 3 year fantastic growth runway ahead of us. It's a multi-year runway. And it's the kind of runway that will hopefully allow Coforge over the next 5 to 10 years to define the archetype of the successful new era tech services firms.
Yeah, got it. Let me get in Shweta as well. Shweta, it's been a fantastic deal for you. I mean, I think you got in at about, what, $1.5 billion, right? Back in 2021.
Slightly shy of that, yeah. But
slightly shy of that.
Yeah.
And now, I mean, so you've done very well for your LPs, etc. So talk to us a little bit about, I mean, how do you see this transaction? But more importantly, for shareholders, there is this lock-in, right? The statutory lock-in, but also you agreed to
there's a structure that we've agreed.
I mean, about a year or so. So you're free to sell shares by June of 26.
Part of it, and then part of it, there's more of a lock-in, We don't want to get into too much details around the transaction,
So could you talk to us a little bit about those commitments? Because I think from a stock market point of view, viewers would be interested, because you own a substantial share now in this. So come June, will we see some shares coming into the market, or I mean, is that commitment is going to... I mean, till that time we have commitment, but what after that?
Wow. I wouldn't come on national television and tell you exactly when I'm selling any stock.
No, but
having said that, no. I mean, I think that was, jokes aside. I would say, from our standpoint, first of all, this is not an exit. I think that's the most important thing that you need to remember. Why have we done this transaction? Sudhir very, articulated the whole synergy piece very well, right? We think these are extremely complementary assets, which once you put, very classically 1 + 1, we think it should be maybe a 3, 4, or 5, right? So why would we otherwise not have taken cash and done the deal? We've taken stock as opposed to cash because we feel there's a genuine long-term value creation plan here. And that's what we expect Sudhir, who's done a fantastic job with Coforge to deliver for us or from a combined entity basis as well. So I would say for us, this is really thinking about the value creation from here on, as opposed to think when I can just jump out of the boat and sell. That is absolutely not the intent.
This is the entity which has changed hands a few times, right, Ashweta?
Well, we bought it in December 21. So for us, it's been 4 years.
But before that, I'm just saying, there have been multiple private equity owners.
Warburg Pincus was actually the largest owner. So we bought a large part from the Warburg Pincus and from the founder. And Warburg continued to hold a stub stake in the transaction even after they sold to us, right?
Okay.
So prior to that, I think they had smaller private equity investors.
So my question actually is for Sudhir. Sudhir, I mean, pardon me for asking, but I think it's a question on everyone's minds that, you're known to capture operational efficiencies, etc., from an asset that you acquire. Cigniti, for example, is a recent one, right? But for an asset like this, a large asset like this, which has already gone through, a few private equity owners, what can you do? I mean, margins here are already higher than where your margins are. What should investors expect you'll be able to do here in terms of making operations more efficient and gaining efficiencies out of the larger entity? Sudhir.
Well, if you look back at our record, this isn't in relative terms the largest acquisition that Coforge has done. About 4 years back, we acquired SLK Global, when we were a 12,000 people organization, and SLK Global came in with 7,000 people. And SLK Global, like Cigniti, and like every other acquisition that we've done, has been extremely successful. Again, looking back at SLK Global itself, that asset, and we talked about this in the investor call, came in at an EBITDA of about 18% and now operates at almost 22+%. When we look at the combined synergies outside the $2 billion data cloud AI core that's being formed, please remember that there is a new vertical that gets added to Coforge, which is high tech, and the healthcare vertical jumps to being almost a $170 million vertical. Please recognize that LATAM, a geo that we've been trying to build nearshore presence in, is a geo that gets scaled up straight out to 3,100 plus, very strong AI native.
No, I know. But Sudhir, allow me to come in. Sorry. My only question is, you gave that example of that acquisition margins went from this to this, right? But here margins are already 19%. So in that sense, there is no low-hanging fruit, or maybe there is. So where will this promised 200 basis point expansion in margins come from?
Straight out from the G&A itself. I mean, if you look at the SG&A of Encora, again, this was a conversation that happened on the investor call. That's 16%. Only 6% of that broadly is from sales. There's 10% on G&A.
Okay.
Given our track record, we think we can substantially cut that 10%. On the investor call, we offered 2% from a near-term perspective. That I believe very strongly, and we've said this in the investor call, we will deliver. Cigniti, if you remember, we went from 11 to 16% in one quarter, EBITDA. Out here, we've said 2% over the first year itself.
The synergies aside, what the street was also worried about was the impact that it would have on your return ratios, because you spoke about the big acquisitions that you've done over the last 4 or 5 years. I'm looking at some data. Your return on capital employed on the business at large, which was over 30% a few years ago, is now down to about 20%. As these assets scale, one would expect your ROC to go back, if not to historical levels, improve further. Can you provide us with a bit of a trend or an outlook here?
Absolutely. Coforge is a growth firm. Let's start from those basics. Coforge is a firm that's returned almost 20 times when it comes to valuation improvement over the last 8 years. We look at ROCE. We remain committed long-term to making sure that the ROCE keeps climbing up from where we are today. But we look equally importantly at the total shareholder return. This is a growth firm. TSR is as important, if not more important, at the current stage of our growth journey. When you look back at our growth journey, again, and I say this, I suspect, for the third time, a firm where the valuation has gone up almost 20 times over 8 years is an extraordinary story. TSR remains a primary area of focus for us. ROE is also an extremely important area of focus for us. It will come back to where it was over a period of time.
Okay, all right. I want to talk about LATAM and the high-tech vertical as well. But tyranny of time on television, we have to take a quick commercial break right now. So Sudhir and Shweta, stay right here. We're going to take a very quick commercial break. Be right back with both of you. Okay, welcome back. 2 minutes to go for the pre-open session, but we're in conversation with Sudhir Singh of Coforge, Shweta Jalan of Advent International on the big transaction, which, as we said, closed out 2025. Now, Sudhir, thanks, and Shweta, thanks for staying on with us. You spoke about LATAM as a key area, right? Where you're trying, as you said, Sudhir, you're trying to build onshore presence, etc. Analysts at Kotak point out that this is first of all, the transaction itself is perhaps a little more complex because of its larger global footprint, which is Latin America, Eastern Europe, etc. And this entity itself has a history of unintegrated acquisitions. So if you'd like to respond to that, Sudhir, because this is also something which has come up.
Well, at the outset, let me say that the analysts at Kotak, and I've read that report, have a lot of very, very good things to say about the acquisition. You've taken one thread, so let me respond to that thread. Latin America, we are getting access to 3,100 exceptional AI native SMEs in the same time zone as US-based clients. From our vantage, these SMEs are going to be an asset just about any which way that we look at the piece of work that's come, the piece of work that we expect to get from here, and the work that needs to be done. When we looked at LATAM, we found that the management of Encora, particularly over the last 2 years, has done an exceptional job of integrating the disparate pieces that existed 2 to 3 years back. I give great credit to the leadership at Encora. I give great credit to them also because the entire LATAM structure delivery is now reporting into one global leader under whom the whole delivery organization is. So that impression might be somewhat dated. And I think that's only one thread out of a report which had extremely good things to say about the acquisition.
No, I completely agree with that. There's no doubt. But on that, are you worried about talent? Because at the end of the day, I mean, these companies are people, right? And the people that you have to execute, etc. Will they be? You'll bring in new leadership team, and as you said, I mean, to report to one entity now. Will there be a bit of a issue in retaining top tier talent, Sudhir, or all that is sorted out? You've closed the loop there.
We don't anticipate any issue at all. This is something that's already been done over the last 2 years. It's not something that we need to do. So the entire structure reports into a leader who already exists, a leader who's going to continue with the combined firm on a go-forward basis. We expect absolutely no issues. And I can't reiterate this point enough. When we look at the two firms coming together, the revenue synergies, the cost synergies, and we repeated this in the investor call earlier also, from our vantage are incredibly strong.
Right. We'll ask you about the revenue synergies in just a bit. Cost synergies, you've spoken about SG&A coming in, immediate 2% that you've spoken about already. Shweta, I have to ask you this. You won't on national TV tell us what you're going to do with the stock. Understandable, right? But you're also a partner in this now. You hold stake in the company. So it is in your benefit for the company to grow. I'm sure your analysts have done some numbers. What kind of growth projections that do those numbers throw up when it comes to synergies with being owned by Coforge?
So over and above what Sudhir articulated from a synergy standpoint, I think he's given some guidance from at least a bare minimum in terms of cost synergies that from the G&A side, believes that he'll be able to deliver, right? Over and above that, I mean, he said that a few times, but we do feel there'll be significant synergies both on the cost side and the revenue side.
Could you put a number to that? Because Sudhir obviously will speak about strategy, will speak about business,
You would
etc.
appreciate we're also in the silent period, so we don't want to give any forward-looking guidance.
firms do a lot of number crunching.
I'm sure. Of course, we've done a lot of number crunching, and we genuinely believe, if you look at the verticals here, right, for example, the verticals that are strength of Encora versus strength of Coforge, right, it's actually very complementary. You spoke about LATAM a minute back, right? So we have Latin America delivery, Eastern European delivery. You know, they were not present in Latin America, right? So that complementarity and the nearshore benefit that you get with LATAM will come into play, right? If you look at geographically, like, you know, we are, largely West Coast, US based, right? And they had a much more of a skew towards East Coast, and they had sort of a mix of US and Europe as well, right? So I think the complementarity is so, huge in both these assets.
Earlier the growth was mid-teens, a little over mid-teens, closer to high teens. Then it came down to high single digit. In your estimate,
For Encora and its standalone?
Yeah.
I mean, I would think about it more as a combined growth. And actually, prior to 2 years back, the growth was significantly more than mid-teens. Actually, it was more like, in the 30s, right? I think last 2 years, the macro has been softer, right? And it is, obviously it has AI, data and cloud, and the skew of the business has continuously moved towards enterprise, right? So, that growth has to be meaningfully superior to last 2 years is our anticipation.
So you got seats on the board. Will you be a passive investor, active investor?
Aggressive investor.
Sudhir, do you want Shweta to be an active investor? A passive one? Question, but I mean, on a lighter note, Shweta, what do you plan to do?
I mean, we are not a mutual fund, right? So, I mean, the idea is not to be a completely passive investor, but, our underlying philosophy is to back strong management teams.
Yeah.
When you back someone like Sudhir, who's almost like an entrepreneur CEO, I honestly don't think that, we need to be, either hovering or interfering the business on a day-to-day basis. Yeah. But hopefully, if we have a role to play and a positive impact that we can make on the business, we'll certainly, both as an individual, but more as an institution, support the organization, till such time we are shareholders.
If it plays out, any other way, you can play this tape back to Shweta. Promise back to Shweta.
And also, Sudhir, is that all for this year or the next couple of years, or maybe you're still watching out for some capabilities that you can acquire over and above what you have done already?
We're always going to be open. The one thing that we've always said is post this acquisition, any future acquisition or whatever we've done in the past, the intent always has to be to make sure that the acquisition has never been EPS diluted. The intent has always also been to make sure that our standing as the firm that has delivered industry-leading growth post-acquisition stays intact. We said this last week when we announced the acquisition on the revenue side, that we treat the fact that we are industry leaders in growth as something that we are understandably proud of. We believe that the revenue synergies that we see with the two organizations coming together will allow us to maintain that standing and hopefully on the margins improve on the growth that Coforge as a standalone has seen in the previous years.
Okay. Shweta, just last question. I know you gave us an answer, but it was not an answer. 50% in 6 months.
But you all don't give up.
In 12 months. You think you'll stay longer or you will sell?
We'll stay. I'm sure we'll stay longer. I think there's a lot of value to be created out here.
Right. And so
that part I'm willing to say.
Your goal for 2026?
I'm sorry, can you repeat that, please?
Your goal for 2026? We have you on day 2 of the new year. And this is a business goal, obviously.
Sorry, my apologies, but I couldn't hear you again.
We just wanted you to wrap this conversation up with your priority or goal for 2026 when it comes to this acquisition and more.
Yeah, well, if I got the question right, you're asking me if there's anything else that's in the
No, we're just asking you for your immediate to-do list for this acquisition.
The immediate to-do list is to Obviously get the regulatory approvals, make sure that we start engaging post receipt of regulatory approvals, and to make sure straight at the outset that the revenue synergies and the cost synergies that we talked about, and most importantly, the people integration that is going to be at the heart of it, are addressed with speed. So we'll wait for all approvals to come in, as we indicated last week, and then we're going to do the same number, follow the same boilerplate that we have with all the previous acquisitions.
Okay, all right. And I think the street looks forward to that, Sudhir. You've sounded confident over the years and you've delivered and exceeded expectations. And we hope you do the same with this one as well. Thank you very much, Sudhir and Shweta, for joining us here on CNBC-TV 18 on the second day of 2026. Happy New Year, and wish both of you and your teams a wonderful year ahead. Thank you.
Thank you.
All right, well, that's the Coforge conversation with regards to the big acquisition which has happened. Let me just quickly take you back to markets, where I think the pre-opens come to a close. Yeah, I think we're just about wrapping up the pre-open session. It's not it's 10 points on the Nifty and about, 70 odd on the sensex at this stage. Maybe we just look at ITC, right? That was the other big story, which... we've been tracking since yesterday, 1%. So the big damage happened yesterday with a 9-10% cut, and you got another 1% today. Godfrey Phillips is the other one. On the back of the same news flow, Godfrey was down, I think, about 16-17%. It's kind of flat. So not very much going on here at this stage. Maybe look at Aurobindo, just a run through of some of the names, right? Stocks which we have highlighted with regards to news, etc. So Aurobindo is up there, about 0.6. Indian Bank, I think there was that business update which Gaurav was telling us about. That's the other one. Sapphire and Devyani, of course, we should look at as
5% at pre-open.
Yeah, as Mangala was telling us, Devyani is the one where I think the Sapphire is down, and Devyani actually is up about 5-odd%. That merger, the transaction which came through. I think we are, backed up a little bit on time. By this time we would have gotten you the technical trades, etc. as well. So let's go and do it now. Mitesh Thakkar is with us, and Sudeep Shah of SBI Securities is also with us. Gentlemen, good morning. Apologies to have kept you waiting. Thanks for joining us. Mitesh, you go first. How are things looking?
Good morning, Prashant. I think on the index, the view hasn't changed. We still believe that it will be a consolidation. What could be interesting is the Bank Nifty. I think, in this entire upmove, the Bank Nifty hasn't had a closing above 59,800, 820 zones. I think we are right there, about 100 points lower. If that starts to break on the upside, then I think we'll pencil in that the Nifty should follow as well. But otherwise, it's a market which is still showing no signs of breaking out of this 26,200, 300 range on the upside to about 25,800, 850 on the downside.
All right, Sudeep, your views on the index as well as individual stocks?
Good morning, Mangalam. Mangalam, I also echo the same view. I expect the markets to trade in a range today between, say, around 26,050, 26,030 spot levels on the downside and 26,230, 26,250 on the upside. Similar levels for Bank Nifty would be 59,500 to 60,100 thereabouts. But I see an outperformance in the PSU banking space, auto space, and a continued move in the metal space.
All right. Mitesh, your stock picks?
Yeah. I have all buy calls today. IndusInd Bank is a repetition from yesterday. Yesterday we had a buy. Repeating the call so that the new stop loss given today becomes your trailing stop loss as well. Buy with a stop at 879 for a target of around 910 to about 915. Jindal Steel is a buy with a stop at 1054 for targets of 1095. A buy on BDL from the defense names. Keep a stop below 1460 here. Look for targets of 1525. And Adani Energy Solutions is a buy with a stop below 1026 for targets of 1085.
And Sudeep, your pick?
Two buys. One is from the PSU banking space, which is Bank of India. Yesterday, we've seen a breakout on the charts above 144, 145. And we feel that the stock could do around 155 on the upside. So this can be bought with a stop loss at 144. And on the second stock, which we like, is Aditya Birla AMC, ABSL AMC. The closing is around 840. Even here, the momentum is pretty strong in the last few sessions. A good recovery post the profit booking the month earlier. So here we feel ABSL AMC could do around 865, 870 and can be bought with a stop loss at 825.
Right. Thanks a lot, gentlemen, for joining in. A bunch of stocks settled higher in pre-open. Bansal Wire for one. Strong third quarter update coming in out there in terms of wire sales. But let's once again look at Devyani and Sapphire. Devyani is settled 5% higher in pre-open, Sapphire marginally lower. Let's run you through the news once again. Board of Sapphire has agreed to amalgamate with Devyani International. It's a long-awaited, merger of Yum Brands franchises, which has been finally announced. The reason why Sapphire is, lower and Devyani is higher is because the swap ratio at 177 shares of Devyani versus 100 shares of Sapphire Foods was at absolute market price. The street was expecting a bit of a premium for Sapphire. That isn't the case to be. Devyani will also go ahead and acquire 19 other outlets which are currently owned by Yum. So that makes it the sole owner of Yum Brands in the country. Why is it positive for Devyani and why is that stock higher? Because one, revenue and cost synergies on removal of overlaps, complete control, which gives them benefits of scale and operating leverage as well. And the valuation at which this deal has been done is fairly accretive. The reason why Sapphire isn't falling is because now the ratio is locked in. So Devyani is higher, Sapphire will follow. If you look at both the numbers, combine the two, the combined entity will have 3,000 stores, revenues of almost 7,800 crores and EBITDA of 750 crores with a near double-digit margin. So what it implies is that Devyani, after this deal, will have a 58% revenue accretion, over 53% EBITDA accretion, for which the equity dilution will be just around 46%. So on all parameters, this is a positive, and that explains why Devyani is higher in trade. It will be interesting to see whether other QSR companies will also be in focus on account of this deal. The other stock that we're watching out for is ITC. The Indian government has notified imposition of additional excise duty on cigarettes over and above the existing 40% GST rate, and as a result of which the brokerages have downgraded ITC. All of yesterday we've been saying that the companies would require anywhere between 25 to 35% price increase. That would impact their volumes and perhaps impact their earnings as well. Nomura has downgraded their target at 340. They believe that the company will have to take over 35% price hike. Their estimates on cigarette volume decline, revenue decline and EBIT decline up for you on the screen. And they've also cut their target multiple from around 25 times to 16 times. So that explains why there has been a sharp reversal in their overall, overall outlook and the target price for the company. Similar is the case with Nuvama. They've downgraded the company from buy to hold. They do believe that better dividend yield and perhaps diversified business keeps them away from a sell or a reduce, which is why they are, still on the tenterhooks with a hold. But the other brokerages have all downgraded the stock. The fear is that there would be down trading and at the same time increase in offtake of illicit cigarettes. So ITC, the biggest down move that we saw yesterday in the last 5 years since March 2020, and delivery sales of close to 6,000 crores. Does that continue today or not is the big question. Even if that does not continue, will there be any buyers on ITC or not is something that we will be tracking.
All right, well, just a couple of seconds to go, literally, to market open. And I think we should have the opening bell. What do we have? 26,125. It's absolutely flat. 26,160. So a little bit of green, 0.15 on the Nifty Bank coming through, 59,791. The sensex is 85,246. The small cap index is up. The mid cap index, etc., will come up on your screen as well. There you go. So this is, some green, but not very much at all, so to speak. A Nifty 50 heat map should give you a quick sense of where things are landing right at the word go. And then we will look at the broader markets for more color. What do we have? I think you've got 35 odd names which are higher and about 15 odd names which are lower at this point. Maruti, Tata Motors passenger vehicle business are at one end in the green. ITC is starting lower once again. So that's the picture and everything else in between. 2730 points on the Nifty so far, 26,172. Mangalam.
Big stock of the day has to be ITC. Straight off the bat, the stock is down 4% once again after that 10% decline yesterday. So now the stock is at 350 and following ITC is Godfrey Phillips as well. Yesterday was a near 20% cut out there and this morning it's opened with another 2% cut. The other group of stocks are the quick service restaurants. Devyani International, straight off the bat again, that stock too up around 8%. Sapphire's opened 4% lower. The street was expecting some premium to come by. Now that the stock is opened for 5% lower, the divergence in the valuation between the two has increased. And at some point, I believe that will narrow back to, what the close was yesterday and back to the shareholder, swap ratio that was agreed upon, because Sapphire is seeing a sharp sell-off right now with Devyani up around 17%. So there's this 15% divergence as against what the swap ratio indicated yesterday. At some point, this should correct, but this deal definitely a clear positive for Devyani International. We have South Indian Bank as well, where the updates were largely in line with guidance. That stock has gained about 3.5%. A good traction is what we're seeing on Force Motors. The sales were up 49-50% in December. It's been a big mover of 2025, starts 2026 with a big move as well. Kesoram continues to be under pressure, but that's not a stock that has a lot of volume backing it. But in terms of volumes, we're seeing decent traction on Indian Bank as well after their update, and TVS Motors is the other one, which is up 2%. So by and large, it's ITC, Godfrey, Sapphire, Devyani, and a lot of these auto stocks and banking names which have come up with their monthly sales or their quarterly updates.
Okay, well, that's the overall lay of the land right now with regards to market open. 1,400 stocks are higher, 880 stocks are lower right now. Hindustan Copper is up is about 2% higher once again. It's the number one volume-led gainer, which is it's going to come up on your screen. And Idea should come up as well. Idea is up about 2% after yesterday's move, day before, and of course, the sell-off that we saw day before yesterday. So it's on the mend, almost back to about 11 rupees 80 paisa at this stage. I can spot Silver Bees, which is up about 2% right now, and maybe a couple of the other silver ETFs are also up 1.5% to 2.5% in that range. Quality Power was a big mover yesterday. It's up 2%. Cross, that is KROSS, 3% higher. And Indian Bank, of course, Mangalam, I think, highlighted. TVS and Hero, etc., the other ones. There's Ola Electric, which is coming up with about a 3.5% gain. Force Motor, the best performing stock of 2025, 5% higher. So it's not bad. Right out of the gates, volumes are not bad at all. And there's enough and more activity which is coming through. ITC with a 4.5% cut now, after yesterday's 9% damage, is the number one volume-led loser across on the NSE. And the number two name is Godfrey Phillips with a 4% knock. So humongous volumes. The one management we had with us, and which is also reacting to the takeaways from our interview yesterday, is Kiri Industries. Kiri had a volatile day, but finally ended about 6% lower, and it's down another 2.5%. So we spoke with them yesterday, asking them how they would utilize the cash. And what they told us, at least that's the intention which has got to be cleared by the board, that bulk of it is going to essentially, over 90% is going to be invested back into new businesses, leaving, I guess, little for shareholders in terms of a one-time dividend or something. But again, it's up to the board to decide, but this is essentially what they're going to take to the board. That's what Mr. Kiri told us. Sapphire is down 4%, and Devyani, of course, is up now 7%. So those are some large moves coming through as well. We have Shreyas Devalkar, head of equity at Axis Mutual Fund, now joining us. Shreyas, great to have you with us here on the program. Thanks very much for joining us. Just first thoughts, Shreyas, on Happy New Year first up to you and your team, and I hope everyone is back. And it's been a busy time, unusually busy time with news flow. Although, typically this is that dead zone of the year, end of the last year, beginning of the new one, but has not kept news flow back. How are you thinking about, your investing style? And I guess that's a question to ask instead of diving straight into what you like and what you don't like. For example, we had S. Narain of ICICI yesterday, and he said, well, his style now is, he thinks it's a mature bull market. His style is basically looking for specific opportunities, well-covered names where there has been significant damage. And be at the ready to make, sometimes as he described it, split-second decisions. Shreyas, what's your style and general approach going to be?
First of all, Happy New Year to you and all the viewers. Just on the way of working in this market, if you notice that all the themes, as we talk about, it can be travel, tourism, EMS, etc., hospital, etc. So point is that most of the themes are discovered over last 3, 4, 5 years. And so in these bottom-up stories, the valuation is a really challenging aspect of it. And that's where the bottom-up stories are there. The growths are getting delivered, but you are noticing that fewer stocks are touching new highs despite that. And actually market, because the high valuation market actually seems to be waiting for a bad quarter to punish the stock. rather than taking the stock up. And in this kind of scenario, definitely trying to focus both on continuity of growth numbers, because it is very, very crucial when you're buying a relatively expensive stock. So that continuity is very, very important. And at the same time, we are also looking at the stocks which are having growth at reasonable price. So I would call out that yes, valuation focus is the key in so to say discovered market, because all the themes are discovered, all the stocks are discovered mostly. So either you get into growth at reasonable price and you will generally get it in potential turnaround stories. So potentially, if there is some change in delta for some segment, so you may observe that in recent past, in autos for last 2-3 months, even in December month, CVs have shown better number. So potential changes is what one need to focus on. Now, whether it continues for next 4-5 months or not, that is obviously the key for the stocks to give return from here. But that potential changes in a particular pocket of the market where valuation are not really trying to capture in that. I think that is where we are focused.
It's a very interesting point that you make, that all the themes are discovered, because that brings me to my, the belief that from what Naren said yesterday as well, we're in a mature bull market and themes are discovered. So you have to dig deeper, you have to look more. And it appears that across sectors, it's not, limited to one particular sector. The theme that is doing well right now is event-based investing, in the sense that, okay, you look at Shriram Finance for one. Right from the day the news broke for, a large FII or FDI investing in the company, you've seen the stock rally and it continues to hold its gains, if not add to that. In fact, since then, it's seen a rally of what, 55, 56% and more, 1,023 on that stock. The other factor is, yesterday, like what happened on ITC. So big moves are very, very event-based, and a lot of people are looking at consolidations, mergers, acquisitions, all of that. Do you see any merit in this thesis, Shreyas? And in light of that, are there any potential themes that you may uncover because of events that may take place? Maybe something like an India-US trade resolution?
So first of all, on what kind of themes may emerge, if I just first go by the valuation premium versus pre-COVID, and that's what we are also trying to do, that where the valuations have not gone up substantially compared to pre-COVID, and that pocket is in banks and lenders, especially that pocket is in IT, it is in consumer discretionary and automobile. So this is where the market valuation, and OEM I'm particularly talking about, the valuations are not substantially higher, while in capital goods, construction, and some part of CDMOs and all those things, the valuations are substantially higher. So the focus is on to finding out companies where the way you are highlighting the turnaround or some sort of investment, and that you have observed in the banking space, the lending space especially in last 6 months, and multiple such deals were announced in this. So as when it comes to what we are looking forward to, the events wise, the second part of your question was, one and first and foremost is the continuation of consumption momentum, what we have seen in festive season because of the GST cut and how it is continuing. As I highlighted, auto, yes, in December numbers as it came out as of yesterday, they're good. Now, whether it is going to continue, and not only in auto or CV, it's across the board. That part is very, very crucial to watch out for next 2-3 months. Second is on the budget front, which obviously is near term. And generally in budget, nothing happens substantially, but obviously on the taxation for equities as well as on the and one step, obviously they have taken for tobacco industry, which is maybe out of budget, but any such move would be very crucially watched out for. Negotiation on both front, that is India-EU trade agreement, how it progresses further, and on the US bilateral, that is definitely key to watch out for. And lastly, there is obviously going to be a state elections in this year as well, multiple, and obviously that and the news flows around that also will be keenly watched out.
All right. Before we move further, just look at Devyani International and Sapphire once again. You know, Devyani had opened about 8% higher. Sapphire had opened about 7% lower. We pointed out that at some point, you know, it will come closer to the ratio which has now been locked in. Sapphire has seen a massive recovery from lows, now sitting with a cut of just about 1.5%, and Devyani too has moderated from the 8% gain that we've seen. So this makes it a lot more palatable in terms of what the ratio has been locked in, and the things move. From a long-term standpoint, obviously, this is positive, Devyani International. Speaking about these themes, you know, the consumption sector has been in focus for a lot of news over the last two trading sessions. One was, you know, the increase in taxes for tobacco, and that impacted a big stock like ITC, which a lot of funds hold as well. What's your thought on that? And the second part is the quick service restaurants. You know, they have triggers, lower GST rates, increased expansion, presence, and the consolidation that we're seeing in this space right now. What are your thoughts?
So definitely tobacco taxes, which came out yesterday, at least the way the workings looks like. Yes, I think after a long time, this number has come up. And that's where definitely we need to look into how it affects the volume growth for the segment as well. Because historically, if you take the historical pattern, it has had some impact on it. When it comes to the consumption space, and as you highlighted on the QSR and even overall retail space, the key aspect here, actually, if you notice initially, especially in the food QSR space, the SSG numbers, that is the sales growth numbers, have not been doing well for quite some time. The only category where SSG actually showed, and I'm talking about the listed space, numbers showed good growth in last 2 to 3 years, or continuity of the good growth was actually apparel and apparel driven space, or you can call it quick commerce because of the change in the dynamics of the material. So there is the interplay of the multiple developments which is happening, right from the food delivery to quick commerce to QSR to the retail chain and so on. So this evolution of this entire space, because of these multiple angles which are playing out and the way it is having impact on the same store sales growth number for the is very important to watch out for, because one important difference in this consumption part versus the other consumption part of the economy, which is say FMCG, is here the growth obviously comes from also from the new store opening. And that's where there is the capital requirement is higher. And to that extent, that growth is essential and SSG growth is essential. So one need to really watch out for these nuances of this growth.
Yeah, no, point taken. Look at a couple of other names, right? Because things are starting to pick up a little bit more now. Orient Tech is up about 7%, so it's a large mover which is coming through, and stocks at about 465 at this point. There is JBM Auto, which is up 5.5%. These are not names which were part of the mix when we looked at, you know, the open, but coming through with gains now. REC Limited is up about 2.25%. So actually, REC has bounced off the lows recently from about 335. It's moved up about 40 rupees or so, 376 now on REC. Yeah, I mean, and more, Nalco is up about 2.5%. Olectra Green Tech is up about 4%. Lots of new names. I mean, South Indian Bank is coming up, and all of them have got decent-sized volumes. And I was talking about the silver products, right? I mean, the Silver Bees ETF, they're all between 2 and 3% higher now. And silver, of course, has been such a massive story over the last many odd sessions now. Quality Power has seen a turnaround. Quality Power, I think, saw a bit of a move higher right at the word go, and now it's down. It had a massive up move yesterday. So basically from 730, it moved up, you know, to a high yesterday of about 740. Okay, sorry. The close day before yesterday was 730, and it moved up to about 840 rupees yesterday, and it's down about 2.25%. Looks more like profit booking. And of course, we were highlighting Kiri earlier. Hyundai is something on the downside. You got about a 2% loss, which is coming through. Dr. Reddy's is a stock which Ekta highlighted in the morning, is down about 1.25%. There is NetWeb, which is coming up back at about those 3,000 rupee levels, down about 1.4 odd percent. Entero Healthcare, right? I mean, massive move yesterday. It's down about 3% this morning. So some reversals in some of the pockets where we've seen gains come through. Also very much part of the mix this morning. 60 points is what you have as far as the Nifty is concerned. 26,200 or so is where we stand. Shreyas, just one quick point. From an equity investor point of view, is the anxiety and hand-wringing about the rupee now behind us mostly? Or you think it'll come back into sharp focus once again?
I think last year, definitely rupee was relatively overvalued, and that sort of adjustment, it has happened already. So even current situation, I think it is okay as of now. One need to look forward to multiple developments here, especially on the inflation front, because the globally commodities are going up. In India, generally, crude is what matters a lot, where crude price is definitely in our favor. So as long as crude prices are in control, because otherwise, if you are noticing that all the commodity stocks are going up, and the reasons can be attributed to multiple things, including Chinese gold anti-involution, whether the dollar prices are how much you look at the commodity prices. So there are multiple angles that are playing out here apart from commodity-specific demand supply. Point is that, yes, the inflation is what one need to watch out for, in which most of the factor looks in control, especially on the crude oil front. But if there is some development around that, then obviously maybe having a negative impact on the entire monetary as well as
Thank you so much for joining us with your view on the market in 2026, the themes, the investment ideas, and the strategy that you are going to deploy. Wish you and your team a very happy new year. He spoke about the auto space briefly, and the auto sector was the sector of the year in terms of returns, and the stocks continue to be buzzing on the back of their December auto sales numbers. Sudarshan, you told us that Hyundai was a bit of a disappointment as compared to peers, that stock's lower. But barring that, everything else is doing extremely well.
That's correct. So both TVS Motor and Hero MotoCorp are higher in the trade, mainly because of the strong sales that both these companies have reported for the month of December, while Hyundai is under pressure after seeing a muted growth in the month of December. So first, starting with TVS Motor, total sales have increased by almost 50% versus our expectation of around 22 to 23%. And that was a big jump, except three-wheeler segment. All the segments have seen a double-digit growth or higher growth than our expectations. If you take a look at the scooter segment, which is the strongest segment, that has seen a growth of 48%. For TVS Motor, both domestic and export businesses continue to do well. It has been one of the top performers of 2025, of 2024, and going forward, it seems like the company or stock will continue to do well. Now coming to Hero MotoCorp, total sales have come in higher than expectations. Growth was 40% versus our expectation of 29%. Both the segments here also, domestic as well as export segment, have seen a healthy growth. Motorcycle and scooter segment have seen a growth. Motorcycle segment forms almost 90% of total sales. That has seen a growth, and scooter continues to do well on the lower base. The sales have almost doubled. But for Hero MotoCorp, one concern is that there is a huge divergence between wholesales that company has reported and the retail sales that we get from Vahan data. While domestic wholesales have seen a growth of 43%, retail sales show a decline of almost 12% for the month of December. Just few minutes ago, Bajaj Auto also has put out the numbers. Total sales have come in line with expectation of around 3.73 lakh units. It has reported 3.7 lakh units. While export for Bajaj Auto continues to do well, for third straight month, export has come in at 2 lakh units. But problem for Bajaj Auto is domestic sales. Even for the month of December, the sales growth is just at 4%. It has underperformed the peers. But the positive point for Bajaj Auto is the rupee depreciation helps Bajaj Auto positively. If there is a fall, if there is a fall of 1 rupee against dollar, it gains 300 crore in the EBITDA on an annualized basis. Last one is Hyundai. Total sales have increased by 6.6%, much lower than our expectations of growth of around 13%. For Hyundai, exports continue to do well. It has seen a growth of 26.5%, but domestic was a drag. It has seen a growth of just 0.5%. That's the reason stock is under pressure.
All right, take that point, Sud. Thank you so much for that. So that's the update coming in from the auto sales. Let's now focus on Muthoot Finance. The stock up 70% in 2025. And we've been tracking the kind of move that we've seen in gold prices and, the management almost every quarter bypassing their growth guidance and reluctantly then upping it from 15% to 30 to 35% in the previous quarter, with most analysts still believing that they are likely to go ahead and beat that. To understand growth strategies, we have the Managing Director, George Alexander Muthoot, with us now. Thanks a lot, Mr. Muthoot, for joining in. Wish you and your team a very happy new year. We're obviously going to talk about the Goldilocks run for financiers, whether that continues or not, cost of funds to come down, and Belstar Microfinance. You did indicate last time that you may look at listing that at an opportune time. We'll discuss all of this, and I reckon you will again reluctantly say that we maintain our guidance right now at 30 to 35%, but the third quarter has been slightly better. Maybe at the end of the quarter we'll look at revising that. Have I preempted your answer already?
You put words into my mouth. Yeah.
No, okay, we'll talk about gold in just a bit, but just out of pure curiosity, the kind of surge that we've seen in silver prices, have financiers like you, thought of possibility of lending against silver as well? Because that's becoming increasingly more valuable too.
Okay, so first of all, I think good morning to all of you, and also wishing you all the viewers also a very happy and prosperous 2026. So just you have put so many questions to me. I will start from the beginning probably. For this year, 2025-26 has been quite exciting for gold loan companies, especially for Muthoot. Q1 and Q2 has been very good. We saw phenomenal growth in the AUM. We grew about 23% in the first two quarters. So we continue to see the momentum in Q3 and hope that we expect that Q4 also the momentum to continue. So as you rightly said, I wouldn't like to put any numbers now because this is a silent period, but otherwise we will revisit the guidance at the time of Q3 results.
But one can be reasonably sure that it will be above that 30-35%, right?
The full year has been quite exciting.
No, but one can be reasonably confident that it will be above this 30-35% guidance that you've given, right?
Let us not put some words into my mouth today. So probably it is too premature to talk now. But then, as I said, Q1, Q2 was quite exciting. Q3 has also been exciting, and we hope to continue the momentum in Q4 also. So that is about the AUM. About the growth on profits also. So commensurate profit is also growing, because as the AUM is growing, the profit is also growing. So we see a good 2025-26 coming by the end of March. We should see a good 2025-26.
And on lending against silver, have you thought about it? Maybe, a less LTV out there, but there has been a big surge. So that could be another precious metal that you could probably, keep.
Yeah, the gold price exactly is going up very fast. In the last quarter, Q3, I think the gold price is really hitting. So everybody has to look at calibrated growth when the price is growing so high. And Muthoot is also looking at calibrated growth for that when the price is so high. But then there is very high demand for funding, both in the rural as well as in the urban markets for gold loans. Because as I was always saying, unsecured lending is people are finding it a little difficult. And I think people are increasingly trying to monetize this gold. And with Muthoot, with all its branches, and also banks with all their branches, and gold loans have become very popular. It's very popular. So that's about the gold loan. Now you asked about the silver price. At present we do not have any, I don't say visibility. We have not considered getting into the silver business, etc. Because in gold we only do gold ornaments. So I don't think there are any silver ornaments worth financing. So because of many other reasons, we have never looked into it. probably going forward, after some time, we may try to look into it. But as of now, we have no plans of financing against silver.
Mr. Muthoot, yeah, absolutely. Good morning, sir. Happy New Year. Always great to speak with you, sir.
Thank you. Thank you. Good morning to you. Good morning to you. Nice to see you also.
Nice to see
you. The new year.
New year. New year, same as the old year. In terms of performance, that is FY20. Now I'm talking about FY27. I know, it's an unfair question, but could you tell us what is the LTV now? Because LTV keeps coming down as gold prices going up, right? At the end of third quarter, what is the
yeah. As of today, as of date, the net LTV is about 57% only.
57%.
At today's price, the money borrowed by the people is less than 60. I think 57 or 58% only. So people have not borrowed to the hilt. Although money is available, funding is available, top-up is available, everybody is not taking the full money.
It was
money only for what they want, actually.
Yeah. So this number was around 60% in third quarter of FY25 as well, right? So it's around the same level.
Yeah, maybe lesser though.
Right.
Lesser though.
Right. So, is this a comfortable, if say it's an asset class you would agree which is seen such, and people will, gold bugs, and there are many who message me every time I say, well, it's an asset class which has seen a lot of overheating, who send me accusatory messages in terms of why that it is absolutely fundamentally driven, etc. And maybe it is, but it's an asset class which has done so well, right? 65% gain in gold prices in 2025. So this LTV of under 60%, does it provide you enough comfort on asset quality front if there were to be a sudden sharp pullback in gold prices? Are you comfortable with that LTV?
Oh, no, definitely. I think even at 75 it should be comfortable, because prices, even at 75 it is comfortable. So 60 is too comfortable though. I would like to add something here also. I talk to the managers, so some of the branch managers come here, we talk to them. I always get a feel of the ground reality from the branch managers who are there. So when I'm talking to them, they also say, sometimes I ask them, you get a part of your salary in incentives. What do you do with the incentives? 100% of them said, we purchase gold.
Wonderful. Wow. That is you've given us the headline, Mr. Muthoot.
Yeah, they all said whatever incentives they get, they are purchasing gold. They are all not very high-end people, but average staff, average branch managers, they are all purchasing gold. I'm not surprised, but I'm really happy that they are purchasing gold, because as you said, it has increased 65%.
Yeah, putting money where your mouth is, right? In that sense, literally. So that's good to hear. But performance attracts more competition, right? And it's a question we've gone over earlier. I think most non-banks are coming into the space. I mean, some are re-entering, some are coming in new. We had Chola, for example, with us 2 days back. I'm just only mentioning Chola because we just had the management with us. I mean, it's very small for them. Some 1-2% of the total book is gold. Others will also, I think, enter the space and sort of, build out the business because it's so attractive. So will yields be under pressure generally, I mean, directionally speaking, because of all this competition? I'm not asking for a number, but is there a cap on yields now?
I think yields will stabilize, because as more and more people come, banks are also there. Banks lend at 11, 12, 13%. Some of them lend at, NBFCs lend at 17, 18%, etc. The yields may not go up, but it will stabilize. But for established players, where the AUM per branch is quite high and the expenses are kept low, because this is a very, operationally intensive business, which leads a lot of expenses on that side. So if you are able to keep the expenses low, then probably even if the yield is not going up, your net interest margin will be better for the place. But for new players coming in, their operation expense in the initial stage, at least in the first 1-2 years of the branch, will be quite high. And so probably people with deep pockets would like to enter this market. But if you're thinking about competition, there is room for everybody. See, biggest competitor is actually the banks. I told last time also, the banks have a portfolio of about 13 lakh crores and the NBFCs have about 3 to 3.5 lakh crores only. So banks have a much bigger portfolio, but nevertheless, NBFCs are also able to grow their book well, and competition, and you have seen our growth also. We are able to, in spite of all this competition from banks and newer NBFCs, etc., we are also able to grow.
One more.
The point is, there is room for everybody.
Yeah, I'm only just one more risk, potential risk, Mr. Muthoot. I know things are going so well, so maybe it's wise to look at what can go wrong as well. What about, again, coming back to the point that it's an asset class which is maybe a little overheated, I don't know, but it's done so well. Is there, would you expect, RBI to come in with some new regulation? I mean, is there any regulatory risk in that sense? There was that point about LTVs. I remember a couple of years back we used to talk. Is that likely at all? Have you heard anything? I mean, them asking for more data, questions, etc.?
The sense I'm getting from the Ministry of Finance as well as from the RBI is that they are quite supportive of gold loan business, because people have now started monetizing it. There is a lot of gold actually there. And from what I said earlier also, people are not using the full amount. See, as I said, the LTV is only less than 60%. That means people are borrowing only what they can and they hope to repay. So in that sense, it is good. Second, we are going only against ornaments, sir. So there is always a value, a personal attachment for the ornaments. So they will take back the gold. That is why you see this people not borrowing to the hilt. If they wanted full money, they should actually go and sold the gold.
Got it.
In fact, about regulatory risk, my sense is that we are getting good support from the Ministry of Finance and also from the RBI. And I think they also, just like us, they also understand if there is any risk in this, because these are all very short-term loans. You are not giving 3-year and 5-year loans. Well, even if there is a price correction or a price change, people will still take back the gold. So that risk we don't see. But of course, we always are cautious in everything we do.
Okay, just a final question before we let you go. Enough, we've spoken about gold and how it is on autopilot, growing extremely well. You're happy with that. You'll come up with, a more specific guidance at the end of the quarter. But on Belstar, you had last time said that the next couple of quarters will be profitable. You've reduced all losses, and maybe sometime next year you will look at an IPO. Are those plans intact as well?
Okay. The first part is right. They have seen the bottoming out, and I think they are going to start showing meager profits in the coming quarters. So that is, but again, we would only go for a calibrated growth in Belstar or this unsecured loan. Today, it is a portfolio of about only 7,000 crores, which is probably very, very minuscule, not even 5-6% of our total portfolio. So that's about Belstar, but it has its prospects. Probably after 3-4 quarters, things will start looking up. People definitely need money, and this is a way of giving money or purchasing power to the people. So as of date, the bad times are almost around the corner, and we'll be seeing meager profits, so small profits in the coming quarters.
All right, 3-4 quarters from now, you might be needing money, and at that time, you will perhaps consider unlocking value out there as well. Thanks a lot. Wish you a very happy 2026, and also looking forward to speaking to you post your third quarter results and what you have to say on the guidance. Perhaps you may upgrade it once again. That's the sense that one gets.
You and the team also a very happy new year. Thank you all. Thank you all.
Always a pleasure.
Let me say it in Malayalam once, Mr. Muthoot.
What is it, sir?
Pudiya Varshathinte Ashamsagal.
Tell me. Waiting to hear from Malayalam.
No, Pudiya Varshathinte Ashamsagal. I don't know if that is the right way to put it.
You must learn a little more colloquial Malayalam. You must come and stay in Kerala for some more time.
I need to
Correct Kerala accent.
We need to get on the phone once in a while.
Not the accent of Malayalam. You'll get the Kerala correct accent if you come and stay here. So come over for the next holidays here.
I will. Thank you for the invitation. Mr. Muthoot, thank you very much for joining us. And it's been a fabulous FY26, and we wish you all the best of luck as you move ahead into 2026 FY27. Thank you.
Right, we take a short break, come back. I'll polish up my Malayalam a little bit, learn from Prashant, and then on the other side, we'll also speak with the management of Zydus Wellness. Hopefully, that person does not speak in Malayalam. Mega trends around health and nutrition outlook. Tarun Arora of Zydus Wellness joins in. Welcome back. The market's roaring ahead. The Nifty now very close to that 26,300 mark. The Nifty Bank comfortably above that 60,000 mark as well. So it's all guns blazing. We have Asian Paints, which has moved higher, Coal India, Britannia, HDFC Bank. That's the big contributor on the way up. And ITC's losses now contained to sub 4% as well. So the market's doing well. Let's focus on individual stocks. Zydus Wellness, the management on our show, in a recent note, Motilal Oswal said that the company's, diversified health and nutrition business with leadership in several consumer wellness categories has the best risk-reward profile among all the other peers. And in, an earlier conversation, the management did indicate growth and margin levers for them as well. The stock over the last 2 trading sessions up about 10%. Tarun Arora, the CEO of Zydus Wellness, joins in. Obviously, the 3 talking points: health and nutrition, the mega trends, portfolio penetration targets that the company would have, and growth potential amidst competition in this space from the new brands too. Thanks a lot, Tarun, for joining in. Wish you, your team, a very happy new year. And as the norm is, the by default New Year resolution is to eat healthier and get on to the fitness way or fitness journey at the start of each year. No better than, consuming some of your products, because there is sugar-free, there is protein, and there are some of the functional beverages as well. So just to speak about this consumer mega trend, I wanted to understand what is the total addressable market in each of the categories that you operate in right now, and how is that growing? If you could give us a sense on that, and then give us your right to win in these categories by increasing penetration.
So, good morning and Happy New Year, Mangalam, and all the viewers of CNBC. Thanks for having me here and capturing a little bit about Zydus Wellness. Fact is that we are at a very interesting time, and New Year is not just the time when, wellness is not just a New Year resolution anymore, but it's a way of life, and that transition actually is happening where consumers actually are making behavior shifts in terms of making healthier choices every day. New Year is a good time when we reach out to them to reevaluate what they're having, whether it's sugar substitutes in form of sugar-free or protein bars, etc. Now, where does Zydus Wellness really fit in from the current trend, and what's really happening is, I think as consumers are, evolving and moving towards healthier options, we looked at what are the broad trends and how do we really fit in and how do we make them more relevant and play in a larger game. So the fact is that if I look at the broad trends that are relevant from a consumer today, they're all concerned about excess sugar. So sugar substitute, sugar-free comes in. But it's not just adding sugar to your tea and coffee, but also sugar-free foods. So we've launched chocolates and cookies and few more products, even in international business. Similarly, another focus is protein, where actually nutrition overall, consumers are concerned about what nutrition do they have, and therefore protein has amongst the macronutrition product matters. And we had Complan, which we actually moved a lot more focused on, pivoted more towards the protein, the fact that we have a higher protein than its peers. And therefore, we have focused on that. And plus, we ended up, acquiring the Right Bite Max protein business. So overall, what we were participating in the market was only a functional beverages. We have started looking ourselves as a protein, and we believe that the whole protein segment will continue to grow. And therefore, the addressable markets could be, there are various ways to cut it, and say that, look, I am participating in bars which have a...
Tarun, sorry, allow me to come in. Good morning, Prashant here, and Happy New Year to you and your team. Good to be speaking with you. Could you give us for these 2 segments, right, which is sugar and or sugar-free products in the segment that you with the sub-segment you are in that broad category, what is the size of the market and what's your share?
So in just sugar substitutes, the category is sub 400 crores, and we are a 96% share as reported by IQVIA Nielsen. But we are participating in a much larger space.
What about same numbers for protein, Tarun? If I can get that from you.
Protein segment again is not properly defined by any syndicated data, but my sense is there will be anything between 1,000 to 2,000 crores can expand because every day there are new formats coming in. Just the bars, cookies, and chips that we participate may be closer to what I mentioned, but the numbers are changing because there are so many players and so many new formats coming. So there may not be a specific number which I can hold myself to.
Fair enough, 1,200 odd crores roughly, but we won't hold you to those numbers. In the first segment, which is sugar, I know, at a high level, penetration levels, and it's so low across products in India that it is, as Mr. Muthoot earlier in another context said, there's room for everyone. And I guess that's true for most sectors. But is there, these super drugs, so-called the Ozempics and all this, some of them go off patent, by the way, early this year. It's become the fastest growing drug, in about 6 months of its launch. So very, very fast adoption. Do you think, and there is research and some evidence that it's not just weight loss and diabetes, etc., which they help with, but a bunch of other things as well. I'm not getting into side effects, and that's another debate. But they've already become very popular, and perhaps they will grow even further as prices come off. Is that a kind of a competition?
So every substitute will be in a way that if consumers are to look for a healthier lifestyle, reduce their weight, we'll look at all various substitutes. In a way, you could call it a competition, but the way I look at it is, if you want to cut sugar, which is very important for your weight reduction, for a healthier lifestyle, actually not just weight reduction, we're not wanting to get into weight reduction, but a healthier lifestyle where excess sugar is not very good. We're saying we have a set of products which includes sugar-free, which we are offering under various products. Then we have also got IM Light, which is a blended sugar, which reduces your sugar consumption by half with the same sweetness. And then we have sugar-free based products. And therefore, the way we are looking at it is that there will be consumers. The whole sweetness space is so large, and you can take various cuts of how we could be relevant to consumers in various consumption points. And that's how we are expanding the pie rather than playing in the just for the diabetes to start with, and there's just weight reduction. I think there is everyday health is important to us, and therefore we are looking at how do we play in a much larger play. Just the packet sugar, I rate 5,000 crores. Now we've got blended sugar, which is very minuscule from that point of view, but we've got that so that from your regular sugar you can reduce, and it's blended with stevia, very safe, natural, and you could consume that. So we are looking at various innovations which allow consumer to live a healthier lifestyle every day through some of these products.
There are two of us in the studio. One of us needs both your products, which is me. I don't think Mangalam needs anything. As we started the conversation, you guys started talking about sugar and sugar.
I'm a consumer.
I switched to green tea from coffee. So go on, Mangalam.
I'm probably a consumer of some of the protein products that they make. But Tarun, my belief is that the way this category evolves, larger share will come to the innovator more than just the person who's a legacy brand, or maybe the person who has the highest distribution, etc. Mind share is more important than everything else out here, largely because the distribution modes in the kind of people who consume these products have almost narrowed or diminished because of quick commerce. You spoke about the strength of the brands that you have already and the market share. But I'm looking at, in the same conversation, you said that on a daily basis, innovations in protein formats, protein delivery formats are coming by. And it's not only from newer players, it's Amul as well, coming out with something like a protein kulfi. So obviously, that is one of the things. Then you have Glucon-D. Yes, well-established, very well-known brand. But in the era of liquid IV and all these hydration salts, which newer brands are coming out with, the belief is, or the fear is that Zydus is innovation lacking despite the size that you have? Is the pace lacking despite the size that you have?
So innovation and pivoting to more contemporary consumers happens in two ways. One is large innovations, which actually which shift the market, and the other is 1% every day kind of shifts which we are making on each of the brands. Now, Glucon D itself, if you really look at it over the last 4 to 5 years, we have almost 65% increase in penetration levels that we have seen. Now, from where it is, it's still very low. To me, the focus is not the 1100 crore market of glucose powders that Nielsen defines, but even within that, we could be 1500 crore. But I think we should look at as share of throat. How do we be relevant to a consumer from a energy and hydration perspective? So Glucon D as a powder, like you mentioned, is changing every day, and we have made some 2 or 3 changes. Some of those are at the product level in terms of our offerings. The other is our consumer profile and how we are targeting them, which could be just the sun versus everyday tiredness, and therefore being more relevant to a larger set of consumers. Also formats, and I think it's interesting that you talk about some of those formats and competition that exists globally. I think we've learned from some of those. Some of those, our new products are already in the market. They contribute small, but they will continue to build on it. And we have some more innovations in the pipeline over next few coming quarters for each of these products, which will change the way these products look. So they do not change every day, every year, that you can make out a significant change. But some of these larger innovations that we have in the pipeline, which will flow out over next few quarters, will address some of these energy and hydration points that you've talked about. And similar for even a Complan or a Max Protein, where we're realizing that consumers are shifting. Like Max Protein, we are innovating so fast, but still not good enough. And you gave a very interesting example where a large legacy dairy player is saying, I have protein. So for us, therefore, to be relevant is not just saying that I have already a large player in protein bar and I should play around that. We are innovating every day. We've just launched a wafer bar a couple of months back. In that, we've launched RTD as we speak. We started billing the RTD, and it's public space, so I can share that. And we have few more launches that we are working on, which will build around the consumer's preferences and pieces of their existing food habits, and how we can be more and more relevant to them in the spaces they want. They want more protein, but they also want to use products that they're more comfortable with. So how do you fuse these, converge these two possibilities is how we are looking at in each of these innovations.
Take that point, Tarun. I'm curious to know what the launch pipeline is, what the innovation pipeline is, more as a consumer than just someone who's tracking the consumer sector. But I would hope that you innovate faster, because the consumers at that level are moving a lot faster than most of the companies can innovate, and most brands can stay relevant. If you don't innovate, then perhaps you have to go ahead and buy some companies as well, just the way you've done with RightBite. What we'll do is we're limited by time and obviously the fact that you're in a silent period. We'll get into specific details of your growth strategy and products and the targets that you have for the next year, basis your third quarter numbers, and we'll talk at a later date as well. But for now, thank you for literally whetting our appetite for what's to come. Take that short break. In fact, thank you for joining in. Before we take that short break, actually, the market continues to hold on to that 26,250 mark. Saumil Mehta is back with us. Saumil, ITC is down 4%. Chartically, where would you place it now? And for the frontline index, we've seen a decent up move. 26,250 is where the Nifty is. The Nifty bank holding above that 60,000 mark. Do you think this is tradable enough?
Hey, hi, good morning. Good morning to everyone. Happy New Year to everyone as well. ITC, definitely a falling knife at this point of time. I'll be expecting targets of around 340, 330 levels, where we have a quarterly swing low for ITC. If it does not sustain here, the next level is 300, which is the next quarterly swing low. So trend is down. So I would definitely expect more sell-off here for ITC, and my view is negative as well. Now in the markets, Nifty is holding on to the gains. and making higher tops, higher bottom. Now we are trading about 26,250, which is a great sign. Good momentum. I'll be expecting this momentum to continue for a target of 26,350, which is achievable very soon. But the next target is 26,700, 800 in the short to medium term outlook. So buy on decline should be the strategy. In fact, at this point of time, it's a great time to buy as well. Stop loss would be 26,100 in the very, very short term. Now for Bank Nifty as well, same thing, but I'll be expecting Bank Nifty to outperform from here with ICICI Bank, HDFC Bank doing great from here. The next target for Bank Nifty is 61,000. It was in the very short term, 60,400, 500 would be my short term targets. But in the medium term, 61 would be my next target for Bank Nifty. So yes, buy on declines, great time to buy as well. Smaller banks looks great, like IDFC Bank.
No, absolutely. Samal, hi, morning. What are your individual trades?
The first trade I would like to go with is Fortis. Fortis has corrected a little bit in the last couple of months, but it has taken support at 200 daily moving average. Again, started moving up and has good momentum here, trading about 20 daily moving average. Stop loss would be 870 and target would be 980. The next stock which I'm looking at is PFC. PFC, good momentum here as well. A small inverted head and shoulder pattern has broken on the upside. Trading above the averages, short-term averages. Stop loss would be 355 and my target would be around 400.
Got that. Samal, thank you very much for that. Appreciate it. Markets, by the way, have picked up, right? I mean, in a significant way. We're up 100 points now on the Nifty. 26,250 is where we're at. We take a break. On the other side, Manisha will come in and she'll talk about commodities which are buzzing around. Stay tuned in just a bit.
Welcome back. We're seeing a big move in a bunch of stocks actually. When he started the trade, Ola Electric was up around 2.5%. Now that's accelerated all the way up to 7.5%. Obviously, the stock's bouncing off record lows. So, it could be a lot of impact cost and low float as well. And then you have Lenskart, which is up around 3.5%. Cartrade Tech is the other one, which is up around 3.5% as well. And finally, we are seeing some traction in PVR, which continues. This morning, there was a brokerage note that came on PVR. So PVR has spiked to the high point of trade as well. But that's about the equity space. Let's go across to Manisha for all things commodities. Manisha, it's silver today.
It is, and that's because pardon me, that is because we've started 2026 on a positive note yet again. So when you look at the YTD gains, it's already showing 2% for you. And this is after 150% of gains that we've seen in the previous year come in for you. So it's starting in a stronger note for silver yet again. And 2025, as I said, was 147% on the higher side. If you look at the overall range that we've seen in case of the silver prices, it was between $29 to $84 an ounce. So that is where your 150% of gains comes in from. And when you look at the Indian markets, well, the kind of gain that we've seen in case of silver was from 87,000 rupees to 2,54,000 rupees is how we saw the prices gain up. Currently in the international markets, it's trading at 73, and for the Indian markets at around 2,35,000 rupees or therein. Well, when you look at the prices in many last years, 147% of gains right now, but silver in last 3 years also has given you positive returns therein. This, of course, has been the best yearly gain since 1979, but the markets do believe that it's a structural bull run. It has been going on for the last 4 or 5 years and could continue perhaps until 2026, 27 and maybe 28 as well. And the reasons for that is that 2025 was a 5th straight year of deficit, and 26 could be a 6th year of deficit when it comes to global market supply and demand mismatch therein. There is a strong industrial demand that we've seen come in from AI, solar panels, data centers, etc. And then the investment demand in sense of ETFs and even physical buying in sense of silver by the way of bars and coins has been on the higher side. Addition of silver also to the US critical mineral list has done its job, and we've seen a lot of silver being flown into US because of that, and the COMEX inventories are higher. Can't say the same about the London and the Shanghai inventories, where we have seen silver units continue to decline there. The other important point to note is the China export curbs that have started from 1st of Jan 2026. Now, China does say that silver is critical to its growth going forward in sense of technology and green revolution as well. So what China has done is that they have put in 44 companies which are licensed now to export silver in 2026 and 27 as well. So the restrictions are extended to other metals like tungsten and antimony as well. These are also important for green energy going forward. So we're looking at impact coming for all of these metals there. Now, the outlook for silver continues to be very, very bright. But let me remind you that on 1st of December, silver was trading at $56. On 26th of December, it was trading at $84. So that 56 to 84 has been quite a bit of a jump that came in within those 14 to 15 trading sessions itself. Much of these outlook that I'm talking about came in the month of November and December. Of course, it would be interesting to see if there is a change in that in the month of January. But at this point in time, Bank of America believes that $65 an ounce for silver could be an average price going forward. That's exactly the number coming in from Goldman Sachs as well. It's much lower at 56 for JP Morgan, a bigger range between 55 to 65 for UBS, and Citi talks about $70 an ounce as a best case scenario. Citi also says that if a profit taking comes, and that is expected to come, you could be looking at silver coming down all the way to 55, even $45 an ounce. So this promises to be a very volatile year continuing in case of silver prices. Motilal Oswal, Amrapali, SMC, our Indian brokerages have talked about $75 to $80 an ounce of a possibility on the higher side as well. So the first half of this year could be on the higher side. Second half could go into a profit taking is what the belief is for 2026.
All right, Manisha, thanks a lot for that. We take a short break. On the other side, the management of GE Shipping joins in to discuss their 2026 outlook and a lot more.
Welcome back. 117 points on the Nifty is what we have. The stock at the bottom of the screen, which is doing the heavy lifting, is Reliance Industries with about a 1% gain. And that is so often more recently acted as a bit of a stabilizer and supported the market, just the sheer weight of the name with regards to the index.
Just sentimental headline of the morning could perhaps be Godfrey Phillips having turned into the green. You know, it opened lower, and from the lows, it's seen a 7% recovery. Currently moved marginally into the green. Obviously, yesterday was near 20% decline. ITC is still lower by about 3.5%, but that's a recovery of about 1.5% from the lows. But still, at a 3-year low after a 10% decline yesterday. But for Godfrey, to have fallen about 20% yesterday, opened about 6% lower, and recovered. Interesting.
Absolutely. Well, let's talk about shipping. GE Shipping is on our radar. Fleet expansion, purchase of ships, and lots to talk about, right? And of course, there is this always, for 3.5 years now, we've had this Russia, Ukraine, and the when question hanging in the balance. G. Shivkumar is Executive Director and CFO of GE Shipping. Mr. Shivkumar, good morning, sir. Happy New Year. And hoping for a wonderful 26 for you, your business, and everyone at your end.
Morning, Prashant. A very happy New Year to you and everybody in your team.
Thanks very much, sir. Even from the last time that we spoke, right, which is not that long ago, once again, there seems to be a bit of a shift which has happened with regards to sentiment around Russia, Ukraine. I remember you telling us that there will be a significant impact on freight rates, on tanker rates, etc. And it's kind of flipped. I mean, at least the narrative right now is flipped once again. That attack, that alleged attack on President Putin's residence and the promises to retaliate, while keeping the promise that they will continue to talk. I mean, have you seen any? We were hoping for, not hoping, but there would have been a negative impact. I'm not sure if it's actually rates have moved the other way or it's all the same.
Yeah. So I think even when we spoke the last time, it didn't look very optimistic. For the peace deal to happen. There were already attacks happening on tankers carrying Russian oil about a month and a half ago. And this was actually an escalation that was happening even as, we were discussing peace talks. Of course, it doesn't necessarily hit the headlines in the same way as an alleged attack on President Putin's residence. but it's not showing any signs of real progress on the ground as far as we can see. And as I said, it's so difficult to call. And you mentioned that we've been doing some fleet expansion. We've done 5 purchases in the last 4 months. We've also done 4 sales. This is part of a modernization, as we've been talking about. We are not committing a large amount of capital. The net commitment in this modernization so far in the last 4-5 months is about 1,200 crores or so. We can commit when we get the opportunity and when we think the prices are right. We can commit in excess of 10,000 crores. So we are committing a very small part of our capital really at these levels because of all the uncertainty and where the prices of ships are.
So this purchase was basically just to modernize your fleet and not necessarily an asset call that you made, right?
That's right. That's right, Mangalam.
Perfect. Just an update on the spot rates, if you could give us a sense how they've been, because there have been various reports suggesting unusually sharp jumps earlier as well. So as compared to average, where are they at right now? And how far away are they from your break-even in both tanker and bulk?
Okay, the last bit, they were well above break-evens. They are higher than they were at this point last year for tankers. So, for instance, product tankers, which would probably have been around the 20,000 mark last year, at this time last year, are probably higher by about $4,000-5,000 a day on average. Crude tankers are probably, the crude tankers of the kind that we operate, which are Aframax and Suezmax crude tankers, are probably about $10,000 to $15,000 a day higher than where they were at this time last year. So that's where we are. Bulk carriers, the smaller ships are a couple of $1,000 higher than last year, while the larger ships may be $5,000-10,000 higher than where they were last year. So everything is at or higher than where they were the last year.
All right. So that means that the third and fourth quarter operating performance would be a lot better for you than it was the same time last year. That's a foregone conclusion, right?
It is on the spot market ships. We have a small proportion on the time charter market. Yeah. But yes, the spot ships, it is significantly better than last year.
It's about, the rates are about 50,000 right now?
For a crude tanker between $40,000 and $50,000 a day.
Okay. Where are, it's a slightly unrelated question, but I guess feeds through indirectly. Diesel cracks at Mr. Shivkumar right now?
Haven't been tracking them really.
That's why I said. Yeah. But without a change in the situation on the ground, you think, through 26 this can continue, or are there any other variables which will come up which we need to track? Or not diesel cracks, but tanker rates?
Yeah. So what's also happening at the same time is while there's talk of a peace deal, there's also pressure being applied in the form of sanctions. A lot of ships, tankers which are carrying Russian oil are getting sanctioned. And that's one of the things that led to the spike in rates in the last 2 to 3 months. We also saw the 2 largest Russian oil companies getting sanctioned. So this peace deal is working in 2 ways. There is a stick which is in the form of sanctions, and then there is a carrot in the form of the peace deal which is being offered. So sanctions are making the market get tighter because ships are effectively getting out of trading. And that, of course, tightens the supply and takes the rates up. So that's exerting pressure in the opposite direction for now on freight rates.
Right. You did say that the second half EBITDA looks a lot higher because of these rates than the same time last year. Last year, the second half, you did an EBITDA of roughly 1,100 crores on a reported basis, the second half. And this is a business usually high operating leverage with some triggers coming in from your offshore business as well, where the operational performance has been improving due to renegotiation of contracts. So how much higher will the EBITDA be in the second half directionally, if you could give us a sense? Because an increase in prices leads to a much higher increase in EBITDA.
That's right. So that point is correct. We have a large amount of operating leverage. We don't forecast this. Again, also because it's difficult because of the large spot exposure that we have. The offshore business is doing somewhat better than it was last year. The vessels are doing much better because of the repricings. two of the rigs are going on contract or went on contract in this quarter, that is Q3, the quarter that just got over. When they go on contract, there is a large lumpy expense that we take, and therefore that will have a sort of reducing effect on EBITDA. So on a quarter-on-quarter basis, but this results into better earnings in the next quarter because you take an expense upfront and then you get the benefits of it. So broadly, the offshore business is looking better. Again, the two rigs are on short-term contracts, and we have to see what pricing they get when they go on to long-term contracts as well. So lot of variables here, while the vessels business, which is 19 vessels, is doing pretty well. The rigs, which have a big impact, there is still uncertainty because we have repricings of two rigs coming up within the next 3 to 6 months.
Got that. Very, very helpful conversation, Mr. Shivkumar. Thank you very much for joining us. And once again, wishing you a great 2026. Appreciate it.
Thank you.
All right. Well, let's just now talk about that name that I was mentioning earlier, Reliance Industries. It's up about 1%, but it's a new high. And the company is monetizing its $80 billion investments across segments. There's Morgan Stanley, which has written about it. Sonal is here to tell us. Sonal, morning.
Good morning, Prashant. There have been a couple of notes in last 1 month on Reliance Industries. The stock is at a fresh high. Morgan Stanley talks about how the company has been monetizing its investments across new segments, across existing and new investments as well. It is to the tune of $80 billion. The company is in the fourth monetization cycle over the last 30 years that it has seen. They are highlighting some catalysts over the next 3 months and next 3 quarters as well, starting 2026. In the first quarter, they expect a refining upcycle, which will, of course, be beneficial for its autochemicals business. They expect an ARPU hike and retail growth in second quarter of 2026. There is a ramp up of new energy business expected as well. The solar gigafactory could come on stream with some capacity. Also, the IPO of digital vertical is expected in the third quarter of calendar year 2026. So a lot of triggers going forward which could keep the stock upbeat according to Morgan Stanley. The AI investments could also add some NAV to the overall SOTP for them, and that's why they have an overweight rating with a target price of 1847. Quite bullish on this one considering the multiple triggers that the brokerage has spoken about.
All right, Sonal, thanks a lot for that. So that's about Reliance supporting the frontline index. The Nifty up 100 points now. With that, we'll wrap up on this edition of fully, fleshed out Bazaar, where we spoke about literally everything. Too much, for the second day of this year and a Friday. But don't go anywhere because a lot of news continues. The team of Chartbusters comes up next.